York, Ilya Spivak in San Francisco, Dylan Radigan in Milan, as we're here to take you through the rest of the trading day. Futures market closes at 5 p.m. Eastern. If you're on the platform, on the website, tastylive.com, thanks for joining us. Come over to YouTube. Tell us what you're trading, what you think of this market action today, where we get a UK-US trade deal. It was leaked last night around 10 p.m. Eastern time. We get the formal announcement today, shortly around 10:30 a.m. We see stocks meander and then ultimately rally as the President of the United States says that it's a good time to buy stocks. Into the close, though, we do take a step lower. There was a report that's been circulated from the usual suspects of Twitter, including people like Walter Bloomberg and Unusual Whales, that you're looking at a potential step down in the China tariff rates from 145 to 50% as soon as next week. So tariff talk is front and center. It wasn't exactly a straight buy America kind of day, though, because while stocks were up and the dollar was up and gold was down, bonds are ultimately a little bit weaker as yields press to the upside. We have some interesting earnings out here after hours. We're waiting on Coinbase right now. So there's a lot to discuss as we wind down this trading week here on Overtime. Dylan, talk to me about what we see with this UK-US trade deal here. Is this the start, the beginning of the end of all of this noise? Did we really accomplish something here? Or was it just good press?
I mean, I believe the primary motivation is to command the world's attention at all times, more than any particular policy outcome. And so every time, doing an individual nation state deal, one by one, I mean, how you could do 180 deals or whatever it is. So I just think that this was obviously a silly deal. I mean, the fact that you have to sort of act like you've negotiated an adverse relationship with the United Kingdom is comical. And so I think that the market kind of dealt with it exactly how to me, I was actually encouraged by the stock market today, which had no choice but to rally when the president said you should buy stocks because he has a history of front running his own announcements that way. And then I think the market was rational to pull it back in when it was left with nothing more than the actual news of the day or the news of the last 24 hours, which is more or less immaterial. But I do think that this is one in what will be an ongoing series of so-called deals.
Ilya, it appears this could be some of the low-hanging fruit that's picked first. The UK, you've got a Japan in there, a South Korea in there, you know, allies, people that we've historically had good relationships with, and then we can kind of move on. The UK seems like it's the lowest hanging fruit, though. Will all other deals that come down the pipeline come as easily as what we apparently see here today, which is, I don't know what the UK really gets out of this. We still have a 10% tariff rate in their direction.
So this is the whole thing. The UK, okay, fine, is the 9th largest U.S. trading partner by volume. We run a trade surplus with them. So it's unclear who, even in the convoluted parlance of saying that a trade deficit is evidence of a country taking advantage of us, which is abject nonsense. But let's take it at face value despite its idiocy. We have a trade surplus with the UK. So even on that logic, this is not the culprit that we need to be targeting. But okay, fine. They're reciprocal tariffs. Everybody gets hit. So we strike this deal. What is the nature of this deal? There is to your point, still a 10% tariff on the UK that stands. If you want to play the logic game, tough as that is, with all of this, that means that the reciprocal tariff floor that was announced on quote-unquote Liberation Day is in fact a pillar of policy. That stands. We did, on the flip side, lower the tariff on UK cars from 25% to 10%, which is, I mean, how many UK cars do you see in the street? Not exactly a big deal. Maybe this helps Waymo with all of those Jaguars they've retooled, but that's about it. This is not exactly a huge a huge piece of the economic puzzle here. So you wonder then, okay, well, what does this deal accomplish and what does it say? Well, it doesn't really say anything particularly positive, though the markets clearly liked that there was a quote-unquote deal, whatever that means. Now, the UK has, of course, downplayed the scope of it, even as they sort of warmly congratulated the US on it, but this doesn't say anything about the likelihood of a deal with China where things are acrimonious. And most worryingly, it does say that this 10% thing is a real thing. And if that's the floor, then tariffs have just gone up fivefold in the US. And that's horribly damaging for global growth.
How do you interpret all these port chiefs specifically? I'm thinking about an interview recently with the Port of Long Beach in Southern California, and then there was another one circulating with the Port of Seattle, with these folks saying that that we're coming up on that we're about to see that the empty boats or the non-boats or the empty docks are sort of cycling in over this next couple of weeks. How alarming is that? How real is that? What are the consequences? How big of a supply chain / consumer product disruption is the decline in port arrivals on the West Coast?
My sense is that there's probably still a train of shipments that are at sea and coming because of what we saw as the front running of the tariffs. We saw that, of course, in spades in the U.S. GDP data, but we just got the latest numbers on the PMIs from the U.S. and finally from China this week. We saw all of those melt-ups in manufacturing activity, in exports. We're supposed to get export numbers out of China today that say, whereas we had 12.4% growth in March, the April numbers have a rise of 1.9. So all of that melt-up seems to have run its course. A lot of those ships are still at sea, I would suspect. And so we'll get a kind of hump in arrivals. But the issue is, of course, what happens next. And I think there's probably more of a smoothing in this than sort of the more hysterical reports of empty shelves suggest. We're probably not looking at empty shelves, let's say, for the next several months. But what then? And that's going to look, I suspect, nasty, because both of these countries are essentially posturing. I think both of them want this on-ramp. Trump said earlier this week, the tariffs are at 145%. That's about as high as they can go, so they're going down, as if to say, look, like, I'm telling you what I'm going to do if you negotiate. And China responded saying, well, if you want to negotiate, you got to lower the tariffs because this whole thing you started. And that gets you to a kind of puffed up chest stalemate where everybody wants off, but nobody wants to look like they punked out. So are these talks in Switzerland going to go anywhere? We'll see, but the damage is being done in real time.
Dylan, do you feel like this is a market where there's risk being short into the weekend, right? By all logical outcomes here, if you think about this, there are meetings in Switzerland on Saturday when the markets close. There is a fairly high shot that we have a gap open with news on Sunday night. How does one approach this market? Do you go in the weekend as an optimist? Do you go in as a pessimist?
I mean, it's just so speculative. I mean, it's basically pure.
It's so speculative. It's
toss a coin. I mean, so yeah. I guess the one thing I guess that occurs to me is maybe you do some sort of you find something with an expanded volatility related to the China situation, which I'm not even sure what that would be, and just be directionally neutral and short volatility on the expectation that the most likely outcome is actually a non-event.
I do want to quickly.
Volatility will be wider on Friday and tighter on Monday. Will be,
Sorry to-
you know. Sorry, no.
Sorry to cut you off here. We have two earnings reports that are out here after hours now. Affirm Holdings as well as Coinbase. Affirm in line, but its revenue is actually down quarter over quarter. So the stock price here is taking a little bit of a hit after hours. Affirm now down 8.68%. Likewise, Coinbase earnings are out. It had a bigger spill. It's since recovered modestly. That's Coom. Now we want Coin. That's down by 0.88% now here after hours. It was off from 208 down to about, we'll call it 199 briefly. And it is since flashing back. Dylan, sorry to interrupt you there. Wanted to just break that in as I see people talking about it in the chat.
I'm just saying, like, the only way to deal with the China news, in my opinion, is either to ignore it, have a slightly longer term time horizon, or use it as an opportunity to sell some sort of pre-weekend volatility that your hope's going to come in on Monday.
Coinbase earnings here, EPS of 24 cents versus an estimate of $1.98. That seems bad.
Oh boy.
Let's just go through the numbers here. Yeah, that's not great. And that's not the right number. EPS of 250, like, that doesn't make any sense. EPS of 254 beats the consensus forecast of 218, which is above the 165 in EPS for Q1 2024. Revenues were up 44.6% year over year by 2.07 billion, but that was below the consensus forecast of 2.09%. Everything looks pretty. There's some misses, some beats. I don't know if anything stands out. That number just didn't make sense. Why would there be an EPS of 24 cents? That's wrong. Fake news. In any event, guys, Ilya, same question to you. I mean, how do you approach a weekend like this, knowing that you face a significant gap on Sunday with a higher likelihood than we have in recent weeks?
I know how I am approaching it, and for me, it's not to get caught up in headlines. It's to let the price action tell you, because that's the only thing that makes any sense. If you look at the price action, I think that will invariably be your guide, at least in managing risk. And in any case, obviously, any kind of open-ended risk in this environment doesn't make any sense in my mind. It's why I've always, in all of my exposure here, have looked to verticals to cap risk. The only areas where I'm not doing that is in the currency futures, which are liquid and trade around the clock, and I'm using micro contracts there to keep everything contained. So for me, it's managing size, but more importantly, it's locking in risk. But other than that, I think you have to go where the price action leads, and where it leads for the S&P as a kind of bellwether for the stock market, in my mind, is still a better bet on the downside than it is on the upside. It looks like we have all kinds of evidence of technical damage here. I think, in particular, on the daily chart, you have what is about as textbook of a bearish technical setup, a topping setup, as you might envision. I mean, you have a clean evening star candlestick pattern at exactly the trend-defining spot in the price sequence here. So you've retraced all of the hair on fire in April. You've come back to the point ahead of that where the initial kind of recessionary concern in markets from mid-February to mid-March settled. Then you had this obviously overdone kind of sovereign currency crisis type thing that the markets were kind of testing out in the U.S. It didn't hold. It makes sense that it didn't hold. You come back now to essentially the starting line. You're right back to where Liberation Day kicked you off. It's as if that day never occurred as far as the price action. And now you get back into, in my mind, a recession conversation. But you can make any which narrative. The bottom line is you've reset that scare. You're back to where you started. You can't get back over, and you have to if this is going to be a rally that lasts. If the recession scare is really gone and not just the crisis, then this is it. The time to decide that is here. And the technicals give you a clear topping pattern and a failure to overturn it today with fading momentum indicators. Now, that sure does look textbook toppish. It's not confirmed, but for me, it's enough to hold my shorts until I am told otherwise. Now, if there is a blistering rally tomorrow, and I get, let's say, a clean 4-hour close above the high for this week, okay, back up. But otherwise, if the price action isn't saying it, I'm not doing it. It's the same thing with the dollar. It's the same thing with gold. All of them moved in the wrong direction for what my exposure is today, but none of them crossed any red lines for me.
I don't think we crossed the red lines either, Don. And I'm just from a tactical perspective right now, until we get above that 57.73 and a quarter level from April 2nd, I think it's a better risk to reward to lean short than lean long.
I agree with that. I mean, I think that the risk is that because the market is now pricing trade deals, the market has been saying for a couple of weeks, oh, this is not what it appears to be. There's going to be a bunch of deals. This is all going to be mostly, theatrics, not without real economic consequences, but the real economic consequences will be more related to general loss of confidence in American leadership and short-term disruptions in supply chains. But to the degree to which either the deals take longer to have, it's almost like a buy the rumor, sell the news. You can see even that UK deal today kind of hinted at it, where actually announcing these bullshit deals is going to actually have a negative impact on the market.
When does that change in behavior?
July 4th.
So we get to the end of this 90-day window and we have concepts of plans, memorandums of, I mean, this was basically a term sheet that was signed today.
Right.
Yeah.
Right?
Yeah.
Right? I mean, like the details to come, a UK official is out here talking after hours that they see the 10% tariff as a baseline. They're going to continue to try to negotiate that down to get the effective tariff rate lower than that. And they see this as an ongoing conversation. So frameworks, again, we're on the off-ramp. That's great. But we haven't, dotted every I and crossed every T here yet. So hopefully some of the tariff rates do come
close to it.
We need to get some of these things resolved quickly. Hopefully there's more in the pipeline. If he rattles off one a day for the next week, I think it's going to be great for market confidence, right? If it's all of a sudden Monday and there's the Chinese delegation goes home from Switzerland angry and, we don't get anything from Japan, India, South Korea, market might start to lose its patience again because there's a lot of time that's passing and a lot of countries to get through. And there are mechanisms to do this in like blocks, Ilya. Mm-hmm. They could do this through the WTO. Or maybe like,
oh yeah,
to the
we have institutions for this, don't we? But no. See, in my mind, the reciprocal tariffs thing was almost like saying we're the WTO now. There's the WTO over there, and it has its rules. Here's our rules, and you negotiate our rules with us. We are the WTO.
Ilya, a few days ago, you and I were feeling pretty swarmy about our positions in gold, feeling a little less optimistic and smug today.
Yeah.
Is this we talk about the buy America, sell America dynamic. Stocks up, gold down, dollar up today. Bonds, we'll leave to the side for a quick second. Are we looking at the stars aligning here? Is gold giving us a clear signal? Is the dollar finally giving us a clear signal that we've turned the corner and we need not worry about the economic impact? The market already has that priced in. We need to think about what comes after.
I don't think that's what this is saying. Obviously, there is an unclenching here. There's no question. The dollar is particularly strong, which is not great for me. I'm still short, modest short. But if you look at the euro, if you look at the yen, if you look at the pound, if you look at the Aussie, if you look at the Canadian dollar, go down the list of individual inputs, because obviously DXY is an old legacy basket that's terribly skewed to currencies that no longer exist, like the Deutschmark and the franc and the lira. So I wouldn't sort of do technical analysis on that, or even sort of price dynamics analysis. But you look at the euro, you look at all of these things, and sure, the dollar is stronger, but it hasn't crossed any red lines. It's at the bottom of the range for the euro, for the pound, for the yen. All of those currencies are sustaining their April gains, and really the gains since the beginning of the year, though the dollar has managed to recover basically to the most recent range bottom for those currencies. But that's really it. There's not really a breakout here that's discernible. So far, again, if the price action shows it, sure, I'll step right out of the way. No problem. But it hasn't shown it. And so I remain unrepentant.
Unrepentant. I mean, I might tap out line for stocks, right? Gold, it's going to be $3,200 an ounce. Stocks get through 57.73. I will let the price action tell me. I have my concerns right now. Risk to reward for certain things leans in one direction. Dylan, people tweet this at me all the time. Dylan's so good with oil. Dylan nailed oil this week. People in the chat, what's Radigan doing with oil?
They better check themselves before they wreck themselves, my friend. That is an ill-advised way of thinking. I'm not gonna. You can think what you need to think, but better
don't think that. Don't think that.
Don't be thinking about that.
Okay, so what does a Mr. Dylan Radigan think about oil here? Because the OPEC news scared the heck out of the market at the start of the week, of course, right? And we find ourselves now not only trading back to having filled the gap from the open, but we're sitting at 2-week highs here in oil prices. Is this just a reflection of India, Pakistan geopolitical risk, Iran geopolitical risk around the negotiations? Or
no, I mean, I've been saying this. I think that oil is trading more as a proxy for recession/growth expectations more than it is conflict expectations. And I think that oil, I'm sounding like a broken record, but I just feel like oil at those at its previously lower prices was seriously divergent from the growth expectations of the stock, or the growth/recession, growth/lack of growth expectations from the equity markets. And that if you believe in the equity market, which I kind of do, not entirely, but I kind of do, I just thought oil was at a price extreme and expectations for economic slowness were too low. And also not just economic slowness, but to the degree to which globalization exists and to the degree to which global trade exists, objects make their way around the world generally propelled by some derivative of crude oil. And so the other theory, I guess, could have been that, well, gosh, if there's going to be a a trade war that stops things moving between China and the United States or Europe and the United States, that not only will there be an economic slowdown, but the degree to which there is economic activity will be less energy intensive because the overall shipping rates, then meaning the amount of products being shipped is also going to be lower. But to the degree to which there's going to be deals, or there are deals, whether it's a UK deal, South Korea deal, Japan deal, whatever the deal is, and they're going to keep coming. To the degree to which the slowdown is not that severe, which is a subject of great debate, obviously, at this point. But that's where I was at now, relative to as was the case last year. When oil's in these middle areas, who could know, right? I was bullish on oil a minute ago when it was at a lower price point for the reasons that I just described. I don't know that applies right now. It's more middling, and to your point, there's more sort of ambient conflict energy out there because of the whole Pakistan-India tit for tat situation.
Yeah, Elliot, how are you approaching oil here at 60? It's obviously a different setup than it was back at 55 near the start of the week. It's a nice recovery. Is oil's rally today? Oil up, gold down, dollar up. Is this all the same story? That this big scare for global growth, we've backed away from that edge, and therefore assets need to reprice a world where we're not looking at, a U.S. economy going into severe recession, but maybe a few quarters of bumpiness ahead before there's recalibration?
I think that's what the bullish argument has to believe, because I think at the end of the day, this is about growth. It's been about growth since all of this began, right? We started the year in a kind of standstill, having hit highs on major markets back in December of last year. We start this year in this kind of uneasy stall. Then mid-February, the data starts coming in saying all of this uncertainty around trade policy and fiscal policy more generally out of the U.S. is creating a dampener effect on activity. Business confidence is down, consumer confidence is down, everybody's hoarding their money, nobody's spending, nobody's investing, everybody's backed up because the fog is so thick, nobody knows what's going on and doesn't want to lay out capital. The sell-off that followed was a recession sell-off. And then in April became something else. And as it became something else, it looks like we lost Chris here, but no doubt he's heard this shtick before.
He can't take it anymore, Elliot.
He can't take it anymore. He's just I can't do it.
Talk about it.
I can't even do it. So with all of that, April was scary and crazy and came back all the way, but the growth scare is still there. So I think for you to believe that we're going to go higher from here, you need more than just, the U.S. is not having a sovereign crisis. Yes, we know. We've had a blistering rebound. I think now you have to believe essentially that you're in a place where the growth scare is over. And if you believe that, then yeah, oil is a buy. I don't think that there's any evidence to suggest that that's the case. In fact, we just got S&P Global PMI data that has put the world at a 17-month low on the pace of economic growth. 17-month low. Which, by the way, lines up very nicely with the 17-month low on U.S. growth, because the only game in town since the middle of last year was the U.S. China is not any less anemic. It's not any more anemic, in fairness, but it's not any less anemic, and neither is the euro area. Those economies have been basically just spinning their wheels for 6-9 months. But the U.S. had everything going and no longer does. That's sort of the upshot here. Okay, they get a deal done, whatever that means, in Switzerland. What could it mean? Could it mean that the tariffs go back down to something adjacent to 2%? No. Could it mean that it's going to go down, let's say, to 10% between the U.S. and China fast enough that the economic impact of what's already occurred isn't felt at all? Sounds like pie in the sky.
Mm-hmm. I mean, what would you need to see to become optimistic at this point, Ilya? Is it all growth for you? Is it all a U.S. economic? And is there some what's the simplest thing that would catch your attention and move you to more of the recession's not going to be that bad and growth is around the corner kind of vibes? And even, I know it's all hocus pocus, but even with the Fed governors talking in the days ahead or in the day ahead,
because it's all hocus pocus, I am forever and always a follower of the price action. And so if the S&P is going to break, and if it's going to push through these levels that were there before, and there's Chris, before Liberation Day, and if oil breaks higher, if copper breaks higher, well, then the markets have told you. There's no need to guess at that point. The markets are telling you. But they haven't done that.
Mm-hmm.
And they're reluctant. And because they're reluctant, I'm reluctant right alongside them. I am but a mirror of the price action as it presents itself here, because I think you can get into a lot of trouble saying everything sucks now and forever, and until I see the evidence that it doesn't suck, I'm not long. That's how you miss stuff, because the markets front run things not sucking by months and quarters. I mean, obviously, the most extreme example was the rebound in stocks in the midst of all the COVID lockdowns, just as soon as the Fed said the magic words. The rebound in stocks in March of 2009, while the whole world was still in deep recession. So I think you have to follow the price action and keep your narrative loose. But the price action isn't there.
After hours, the market's a little bit off 56.86 right now. Sector performance today had a pretty decent sheen to it. Among the sectors that we cover here, 16 of the 25 were in the green. Led higher by the energy sectors, which noteworthy because those alongside the banks, Ilya, it does give a growth flair in a rather traditional way to the market. Dylan, I ran this exercise earlier with Jamal, so forgive me for doing this again for people who listened to Futures Power Hour earlier. But let's say right before the election, something happened and I decided to take a long nap. I ate the poison apple. I'm like Sleeping Beauty.
Sure.
And here today, I wake up, and the only chart that I look at is XLF. I would think, wow, the American banking system's holding up. Yeah, the economy's probably going through something. It's moving sideways, but 49.86, I mean, that's higher than where we were before Election Day and then some. Things must be okay. The economy's doing fine. Are the banks telling us that we're just overreacting to everything?
I mean, I don't know if the banks are telling us that or not. Obviously, we always overreact to everything. I mean, that's just sort of par for the course. I guess I'm going to take what I'll call an Ilya-ism, which is the market can be at the exact same price point, but for very different reasons. So just because the levels are similar to that the same price point or the same price levels can be communicating completely different ideas, I guess would be the distinction between, just because the level is here and the level is there and you slept and it's similar, doesn't mean that the reason that the level was where it was, 6 months ago or 9 months ago, and the level's where it is now, is anything remotely similar. And as a result, it doesn't mean that the expectations for the future are, that it's not discounting the same future, basically.
Oh, and by the way, look at XLF, and where is it? It's back where it has erased the Liberation Day gap. It's the pre-holy moly level. Well, okay, but where were we before the holy moly? A recession scare. Has anything changed about that? No.
No. High of 50.33 on April 2nd in XLF. The high today is 50.37 before we back down, so we can't quite clear that hurdle yet. The regional banks are looking a little bit better, of course, today as well. 56.85 on the close. The April 2nd high there is 57.28. We hit a high of 57.25 today. So not quite scaling through everything yet, but you can see how for so many of these charts, we're basically trying to cross the line in the sand. Semis are holding up a little bit better than everything else right now. They have made an advance through the April 2nd high. Technology, broadly speaking, has made that advance through the April 2nd high, although, here we are pinned near the pre-Liberation Day highs, and that's basically where we closed today. It's just going to take a little bit more. A little bit more here, and you can kind of clear the hurdle. And this seems to be just a game of confidence, right? And Dylan, if we get another trade deal, let's say Monday, China,
another one.
You get another one. You get another MOU. You get another term sheet from Japan, from South Korea, right? They bring DJ Khaled in there, Ilya. Another one, right? So
there we go.
I got the reference.
There we go. Come on over. The hip hop joke water is fine.
Dylan, I think that would actually be the most constructive thing, and you can kind of look past the economic data then, because you see that it's off ramp into an off ramp into an off ramp into an off ramp. The worst thing that happens is that you get no other deals next week, right? We got to get more deals in quickly, or at least term sheets of deals in quickly to keep spinning the wheel right now.
That's right.
India seems like it might not be a priority at this point in time, given what they have going on in Pakistan, or rather in Kashmir versus Pakistan. That probably takes a back seat. Dylan, can I throw a conspiracy at you? I think I should.
Please do. I love a good conspiracy.
Ooh.
Is China behind what happened in Kashmir a few weeks ago? I can't help but think of this timeline where we've seen over recent months that American companies have been talking about and taking steps to move manufacturing from China to India. We here in Overtime, just a week and a half ago or so, discussed a news report out how Apple was trying to move some equipment to India, and instead of facing the typical 4-day delay, delays began to stack up into several months, and none of the equipment has been able to be moved out of China into India. Over the past few weeks, we've heard China call Pakistan an all-weather ally. As the trade war is ramping up, there's this horrific terrorist attack, obviously, in Kashmir. And now you're engaged in a conflict between two nuclear-armed powers at a time when American companies are trying to figure out where they can re-domicile their manufacturing. India doesn't look like it's such a hot location all of a sudden. You probably want to wait to make any formal announcements.
I mean, I hope if the Chinese did that they covered it up nicely, because that would border on, that's some pretty nasty poker right there, my friend.
Haven't historically trade wars led to real wars?
They have.
All-weather ally, by the way.
Is a very strong term.
What a strange choice of words. What a strange choice of words. I mean, you sort of, when countries want to talk to each other, but they're not talking to each other, diplomacy often takes on this almost coded language where you're trying to tell the other side something without telling them. What an interesting choice of words.
I can't look past it all. I just think that, we talk about this being a chip on the field. If companies could just pick up and pack their bags and move out of China, then this wouldn't even be a conversation. Keep the tariff rates on. They move to Vietnam, Cambodia, India, Thailand, right, wherever. Cheaper labor, but not in China still. And now one of the big places that Apple over the years has been moving iPhone production to is probably taken off the map as a desirable location in the short term. So a piece of leverage is off the table for the U.S., right? Like our companies are just going to move elsewhere. They're just going to move to friendlier nations where they can, ally reshoring, friendshoring, as we call it, right? We're just going to friendshore everything. We don't need to bring the factories back to America. The factories go back to countries that we have low tariff rates on that are our allies. Well, the biggest one that has the largest source of labor for electronic goods is now in a hot conflict with another nuclear armed power. What do they say? Two coincidental.
Masterful. If it was done, it would be a master play.
I can't link the two. I mean, I don't find I also rewatched all the Mission Impossible movies recently, so there is one that takes place in the Indus River Valley. Mission Impossible Fallout, which is just a fantastic. Tom Cruise makes great movies. It's too bad he's such a.
He really makes a fine film. That man he's a talented individual. I think.
I gotta rewatch Top Gun 2 again. It was so good. That was a really good movie. Dylan, talk to me about Tesla. First buddy here, a little bit of a recovery yesterday, as we noted on the show, right up against that 1 month moving average. We talk about a potential trade up here in Tesla, where if this is a double or triple bottom, the measured move being about $85 or $90 wide, depending upon your measurement points, sees a potential trade closer to 380, 390 moving forward. Today's obviously a good day. Tesla's up 3.11%, quietly a leader here. Is a way to trade this market. If the market's going to go up, right, if we're wrong about stocks that were reached a nearterm top, wouldn't a name like Tesla be one of the leaders in a continued 100%. Bull market, Matt,
yes.
rally?
I mean, I think, I probably, if the market is going to go higher, which who knows right now, honestly, but if it's going to go higher, Tesla's going to be one of the, I would speculate that Tesla will be one of the key performers.
You'd think on a whole host of grounds, if only because sure, there is a rebound, and if there is a rebound and it's real, then it's probably linked to some kind of unclenching with the U.S. and China, which of course helps Tesla directly, but also in that the stock has become something of an avatar for Elon's proximity to the administration. Maybe you'd get a kind of sentiment improvement also, because if you walk off the trade war and the things are okay broadly, then a lot of the ill will maybe takes a graduated step lower, especially since a lot of the firings are being undone. And so with all of that, then maybe Tesla just gets a little bit of a, maybe we don't hate this quite so bad now type of a response.
Well, the auto manufacturers today, all up across the board, except for Ford, which is off by 0.05%. You see here, Stellantis was up 4.61%, Tesla up 3.11%, GM up 4.11%, outperforming the broader market. And Tesla itself, this is the one thing that drives me crazy. You have Ron Vara, a guy who is a plagiarizer and a liar about his credentials, and Peter Navarro giving the president trade advice when Elon Musk is right there. And for all the complaints I've given about him, guy is one of the best domestic manufacturers in American history. Right? He knows how to stand up a supply chain better than anyone else. And he's done it in a manner where basically it's all local sourced. So Tesla is one of the companies that has the least impact, the lowest impact, thanks to these tariffs. Why wouldn't you be using Elon Musk as a guy to advise you on how to rejigger onshore manufacturing? I digress. The fact that these companies are up mostly across the board today tells me there's more relief coming. And we saw the UK steel and aluminum tariffs zeroed out. There a path forward for Mexico, for Canada, perhaps? If there is, are these manufacturers underpriced at these levels? They're probably going to face difficulty if consumption's down, Ilya. That's obviously not a debt, right? But longer term holding, are they a going concern? Yeah, they're going to stay in business.
I mean, sure.
But if they're getting carve outs, then the market's probably underpricing them. And today's move across the board, it wasn't just a Tesla thing. It was all the manufacturers. They all had a nice little bump. I would point out technically GM, it had this false breakout in March we stay in that downtrend as we've been meandering here, treating former resistance as support and trying to trade through former swing highs. So you can see across the board, again, GM looks like it's trying to bottom, like it's trying to climb out of its downtrend. Okay, closing back above the 1 month moving average for the first time since February 25th today. And Tesla's potentially on the precipice of a breakout. There might be something big in the works in terms of a trade deal. Maybe it's about US, Canada, Mexico. Maybe that's the next domino to fall, Dylan. And that's like the real confidence boost you need for the market to fully buy in that this is all just a game of 4D chess. As much as I hate to admit that, right? Because it contradicts my own point of view about how this has all worked out. But wouldn't that validate then the bulls for the next few hundred points?
For sure it would. I mean, I think that's kind of with the bull. I think that's why the markets in mid-April came back from those lows. Was on the belief that wherever it's going to come from, whether it's a Mexico, Canada, U.S. deal, or whether it's a China, U.S. deal, or some combination, Europe, Japan, whatever, that one way or another, this is all going to end up in a bunch of deal making. That basically what was announced at the beginning of April is nothing more than a negotiating position that will never come to fruition.
Ilya, I think the plan for me tomorrow is I'm going to stay short NES. It's not changing. But after talking about it yesterday and today, I think it's going to be worth dipping our toes into something like 71 days out in something like a Tesla or a GM or a Stellantis, the long 350, short 400, risking 1 to make potentially 7. That's a long time. If Tesla is going to break out here, it's the kind of stock that moves in leaps and bounds. And getting back to 350, that's nothing. We went from 350 down to 300 in the span of like 5 trading days. Tesla moves like a meme. So,
especially here.
Yeah, I think, I find myself very conflicted. I'm not going to shy away from that. Monday, great day. Literally not a single thing I had. Except for Eli Lilly and my long-term portfolio and on the tastylive account, nothing was down. Today, everything except for one thing was down. So I gotta
rough day.
Yeah, I gotta say,
it's been a rough day.
The week is basic. I'm still up on the week. It's not as good as it was yesterday morning. But if I'm wrong and we're wrong still, we got to have something in our pocket that takes the edge off.
To me, that's the Russell. Because while a lot of the stuff in ES and NQ is easy to argue with, the Russell is harder to argue with. I mean, take a look at the 4-hour or the 8-hour here. That looks like maybe it cracked. Now, the Russell is less liquid. It's not as well appointed. But if you look at sort of where you've ultimately landed on this, it does look like maybe, just maybe, and again, it looks different depending on what you want to look at. The break looks a lot more convincing on the continuous contract than it does on the June, but nevertheless, on the 4-hour chart, you have a break. You've taken out the previous high. So I think if you look at all of this, if you're going to hedge somewhere, maybe what you have is a long Russell, short NASDAQ, long Russell, short ES kind of a vibe here, if you must hedge.
Interesting. Yeah, the Russell perking up today and leading is something that I don't think should be dismissed. They obviously are going to be a little bit more sensitive to cost increases, and the fact that there's a zeroing out of the steel and aluminum tariffs, that's something significant that we do trade with the UK about. We don't, they're not our biggest trading partner. They're in the top 10, but the metals is a big component of that relationship. So with that said, you find yourself with domestic manufacturers now having a little bit less pressure on them. They're not out of the woods. If this takes a step further, and again, more of these type of deals coming through, Dylan, you mentioned something earlier that I can't get out of my head either, though, as we wind down the show for today and the week. It's very rare that a president of the United States says that it's a good time to buy stocks, or you must buy stocks now. I think of Obama in 2009, 3 days after the market bottomed. I think of Trump in April. And I think of Trump now in May. Trump in April was obviously, he said it that morning, and then the NASDAQ was up 10% later that day. That obviously didn't play out the same way today, of course. But if you bought back when Donald Trump said buy stocks and you bought at the high of that day, you're still up. But you said that he meant to front run some of these things. And there might be some evidence that that's been occurring already in some of these markets. So how should people like Ilya and I reconcile that we have legitimate fundamental reasons to potentially be short still, knowing that he may be teasing something bigger around the corner, as he is wont to do as a TV showman in his heart?
I mean, I think you have to internalize that there's a 100% chance of a series of trade deals and be comfortable being short despite that. You can't be short hoping that there's not going to be some Trumpian TV trade deal.
Sure.
There's a 100% chance of that. You have to be comfortable that the levels right now already reflect the expectations of that trade deal. But what's not priced in is the recession that's going to be caused by the disruption and uncertainty in the flow of products and services while the deals were being, while trade deal theater was being produced.
That, by the way, might be the ultimate in the holy moly, as it still looms ahead, where the peak in this optimism is some kind of sign of a U.S.-China off-ramp. The dust lands. Everybody looks around and goes, wait, where is everything? And where is oh, yeah, there's a 5-fold tariff that's been hitting us going into mid-year, and that's going to keep on being with us for a while. In fact, the PMIs that S&P Global and Caixin released today for China was writing and saying, you see how there's people being fired in China? You see these job losses in China? That's because it'll be the second and third quarter data that really tells you what all of this has already cost. And that's Caixin talking. That's from a Chinese perspective. Not the governments, mind you, but private sector. So talking of price increases already happening, this is my piece of anecdata. I like the Echo Spot. I have one here in my office. I have one in my kitchen. I have one in my bedroom. I have one in my gym. I like being able to talk and say, put on music, set a timer for the laundry, right? Glorified alarm clock. The Echo Spot that I got. I'm too much of a Luddite to talk to Skynet.
Oh yeah, no, I put listening devices all around the house. So, government, please listen in. I purchased it on October 1st, 2024. It cost $44.99. It is currently listed on Amazon.com for $64.99. Same exact model. So the price increases for things are going up. When it bites, it's going to eat into consumption, right? We only have so much money to throw around. So I will not be buying a new Echo Spot for the bathroom. I'm kidding. I wasn't going to do that. Don't need to listen in there. But we do see that ultimately just doing a spot check of going through goods of toothbrushes that I've purchased in the past. Those have gone up about 70% on Amazon. Everything across the board. So do due diligence yourself, right? Look to the things that you commonly buy in the store and see if they've gone up in price. And maybe like, oh, it's only 50 cents. But yeah, 50 cents on a $2 good. Well, that's a 25% price increase. And with enough goods, that's problematic. So I hope.
Tell you what, tickets to the Outside Lands Festival here in San Francisco have gone up astronomically. I'm not sure that the trade war is at fault, but it might be emptier lawns this year.
I hope I'm wrong, Ilya. I hope we are wrong. I do. I hope we're wrong. I hope we lose money on our shorts because ultimately it means we're out of the woods economically and we're not staring down a self-made crisis. That's legitimately. I'd rather be wrong.
No, I'll gladly switch to making money on the long side, being long dollars and long U.S. stocks. La-di-da, let's go. That would be great. I just don't see it.
With that, Overtime is out of time for today and this week. We'll be back on Monday, same time, same place, 4 p.m. Eastern, right after Last Call. So for Ilya Spivak and Dylan Radigan, I've been Chris Vecchio. We'll see everyone soon. Hope you have a good weekend. But we're not done here on Tasty Live, of course. Ilya and I will be back tomorrow for Futures Power Hour, but he's coming up next with Macro Money. See you soon.
See you there.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
What is your favorite option strategy? What is your favorite option strategy? What's your favorite option strategy?
Oh, the condor. I love me an iron condor. It doesn't always love me, but I like defined risk. I like the wings. I think that you can get like some directional exposure if you want to. You can control the position size a lot easier than undefined risk, so that's just my go-to.
It really depends on the time period. Right now, it is the short put spread, right? But a couple of months ago, it was a calendar call spread, trying to take advantage of upside moves, oddly enough, that we were seeing in the market.
Call spreads and put spreads, I'm rocking on a budget here. So, we got to offset some of those debits.
Got to be a diagonal spread. Short a little bit of front month volatility, long back month gamma, and a little bit of volatility there as well in the back. So it allows you to be directional, but stay small with the position.
Diagonal spread. It allows you to stay defined risk, play a directional move, reduce cost basis with the sale of the short option in the front, and buying a lower IV option in the back.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient. And Tasty Live does it again. They teach it in a way that is fun. It's easy to understand, and you're learning from people that have done it for 40 years.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
We have a trade deal, everybody. I guess. That's the news that's elevating the markets today. But the real question is, can we get something done on this trade war that really sticks and really matters for avoiding global recession? That's exactly what we are going to tackle here on Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live, and we're going to take a look here at what is probably the biggest real event risk for the markets, the evolving relationship on the trade front between the U.S. and China, and take a look at some of the economic data that's informing the state of play here, as well as where we're going next. But first, let's take a look at the price action, because it is certainly of a more chipper variety here today, but again, very interestingly soggy into the end. So obviously we've had a blistering rally here for the S&P 500 as a kind of bellwether for overall risk-taking from the panic lows in April, what I've come to call the holy moly. This is the Liberation Day gap right here, and this is where the markets go, oh no, is this a sovereign or a currency crisis in the United States? And then as this volatility shakes out, the answer quite reasonably, I think, ends up being no, it's not, because even if the U.S. were to unilaterally withdraw itself from the global trading order that it has itself engineered, and which has the dollar and the U.S. Treasury bond at its center, there'd still be no viable near-term replacement for the dollar or the Treasury bond as the most liquid, most viable unit of commercial exchange and the most viable benchmark for riskless interest income that is available. And so with that, you still have the global architecture as it stands, and so the markets unclench and we get back to this starting line. We get a little bit of a pop yesterday in the wake of the Fed policy announcement, despite some initial unease with the lack of urgency at the central bank. But then really the news today is what gives us a slightly higher high here. If we go back and actually poke at the high that was there before Liberation Day going into the month of April, interestingly, we don't stick the landing. We don't actually manage to get over it, and we ultimately recoil back into the range for price action that has emerged since the beginning of the week. We failed to clear Friday's high. We failed to make headway through this resistance that lasts, and that we actually got all the way up there only to come back in. That can be a sign of technical exhaustion. We'll, of course, wait and see. But really, the question here of motivation is very juicy indeed, because what catalyzed this today seemed to be the announcement of a trade deal between the U.S. and the U.K. Now, obviously, this is not exactly the same thing as many of these negotiations, because, of course, it is the UK. It is one of our closest allies from the womb, as it were. Moreover, it is a country with whom we ran a trade surplus last year. Finally, the tariff of 10%, the benchmark tariff of 10% established by Liberation Day, which was itself a 5-fold increase on the 2% average tariff that was there before then, that stands as a consequence of this quote-unquote deal. And I say quote-unquote because nothing here appears finalized. The UK is at pains to talk about ongoing negotiation as all of this is occurring, despite the triumphalism from the White House, because, of course, they don't like that there is a 10% tariff, even though there was a little bit of a carve-out to lower auto tariffs from 25% down to that baseline of 10. It is still a lot higher than where we were before the calendar turned to 2025. And this is the 9th largest U.S. trading partner. It isn't the first. And so if what we're looking at here is optimism about the idea that deal making can happen and tariffs can come down, conceptually, the real test of that concept would be some progress with China, where, according to Treasury Secretary Scott Bessent himself, there is now an effective embargo on what is the world's most significant leg of the supply chain, the linkage between the world's number 1 and number 2 economies. So it'll be very, very interesting indeed to see if any of this holds up as Bessent heads to Switzerland to meet a senior Chinese trade delegation, ostensibly to kick off talks. And of course, before then, the posturing is loud and heavy. Asked whether he'd lower the tariffs from 145%, the president flatly said no, that he would not do that as an inducement for talks to proceed smoothly, that would be part of the talks themselves, although he did signal that the tariffs won't go above 145 and that they have a natural direction to come down from here, but said he would only do that as part of the negotiation. And of course, the message from China, the spokesman from the finance ministry there saying, if the U.S. wants to talk, it needs to stop exerting pressure. That is to say, we can talk about a trade deal, but you need to lower these tariffs first. So neither side wants to blink here, seemingly, as we head into these talks. And China has loudly said, well, the U.S. wanted this meeting. We still firmly oppose what they're doing, as if to say, we're not going to look like we scrambled to the negotiating table here. They are. And the U.S. is saying nobody is scrambling anywhere. And so both sides seem to want this off-ramp, but neither side seems willing to take a step back from the breach. And so it is with this in mind that we're going to get some very interesting economic data coming out of China to set the stage, because while there is a stalemate, it is a waiting game and beckons us to take a look at who is going to blink first, or at least where the economic damage might strike hardest. So incoming data out of China expected to show that export growth slowed sharply in April from 12.4% in March to just 1.9%. Imports, meanwhile, continued to flounder yet again, a negative number expected, down 5.9% year on year. None of this, of course, speaks to anything but weakness, and more importantly, that melt up in imports that you saw in U.S. first quarter GDP numbers. That, of course, looked like the front running of tariffs, as did the massive build in inventories. But China's key role in supplying that front running was, of course, firmly on display here. Going into the beginning of the year, we had a surge in exports, and indeed, even coming into the election last year, some pep there, but that has clearly started to unravel as front-running tariffs that have, of course, now already occurred has basically run out of runway. Meanwhile, domestic demand has been getting more and more anemic since the end of 2023, where it peaked, and that continues to be the case. As if to highlight that point, we have inflation numbers coming out of China expected to show another month of negative inflation, 0.1% year on year expected. That, of course, speaks to the absence of price pressure as catalyzed by demand for consumers. And then on wholesale prices, it's been all negative numbers for a long time, going back to the middle of 2022, and it's not getting very much better there. Again, speaking to how much throughput there is through the still most significant node of value add production in the global supply chain, how weak demand is for wholesale output, and so how weak the global trading environment actually is, and how much China is able to capitalize on it, which is obviously not very much. This continues to be a story of weak demand, both for consumers and for firms that supply both them and the external market. Now, earlier this week, we had the S&P Global and Caixin private sector estimates of Chinese PMI data. These are purchasing manager indexes. Of course, as ever, 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, I should say, the faster the growth. The further you go below 50, the faster the contraction. Take a look here at the composite index, and you find a 3-month low on economic activity growth that's just hugging this 50 line. So we've slowed to near standstill, and current activity is the slowest it has been since January, telling you that indeed there was a ramping up in February and March, and then in April it seems to all have come undone. You can see that here in the breakdown between services and manufacturing, and you can see that manufacturing in particular has taken a dip here, ostensibly as this front running of tariffs ran out of juice. Interestingly, the 3-month low on growth, that matches up with what we got from official sources. China, like the U.S., has 2 versions of these PMIs. One of them is from the China Federation for Logistics and Purchasing, which alongside the National Bureau of Statistics makes the government's version of PMI. And here, what you find is indeed standstill. The composite is at 50.2. Services has slowed, but it's really the story in manufacturing, which is, again, contracting. And contracting at some of the slowest rates we've seen in this entire sequence. We're basically at the bottom of the range for manufacturing performance going back to early 2023, which, of course, reiterates what we've been saying about China for quite a while. For 8 consecutive quarters now, China has had economy-wide deflation. That is to say, real GDP has run faster than nominal GDP, implying that the inflation adjustment between them is negative. That, of course, means that basically the whole economy is on discount. If prices are falling, then there is no demand to beckon them higher. And so the world's second largest economy is basically on life support here. It's treading water. It's not really going anywhere. Moreover, the deflationary gap is actually getting more severe over the past 3 quarters. So we're in a situation where China's economy still looks to be in very bad shape. But then on the flip side, of course, we got numbers out of the U.S. that don't paint too much of a better story. S&P Global PMIs give us a composite of 50.6, near standstill. If we look at what this compares like with the other set of PMIs out of the U.S., which also does too, that this one is from the Institute of Supply Management. There's a little bit of a difference in the components. So here, the manufacturing is obviously weaker than it is here. It's 48 there. It's 50.2 here. Services is a little bit weaker here, 50.8 versus 51.6. But the upshot is basically the same. Both of them give us a composite level that is just above 50. And we don't have one calculated here because that's not the way ISM does it, but it's not easy, or it's not difficult, rather, to surmise. Manufacturing is a smaller component of the average here than is services. And so if you average these two, but you tilt it in favor of strength because services is a bigger deal, well, then you end up somewhere just above 50, give or take. So whatever the specifics internally, the bottom line is since the beginning of this year, we've moved off some of the strongest growth we'd seen in 3 years or so. You can see that across the board here, down to what is essentially standstill. And of course, when you compare that across the US PMIs, both versions of the ones from China and, for good measure, that of the Eurozone, you have convergence on standstill across all 3 of the major economies powering global growth. Whereas from the middle of last year, Europe and China were weakening into basically an idle state, but the U.S. was powering on at some of the strongest growth we'd seen, especially toward the end of the year, since all the way back in early 2022. Now, across the board here, we've ground down to basically standstill. And of course, we look at these 3 economies because together they comprise 58% of global GDP just by themselves. Never mind their knock-on effects on the remaining 42%, which are for the most part vendors that depend on demand from China, the Eurozone, and the US in order to have GDP contributions of their own. So if this is the story for the engines of global economic growth, that is convergence on idleness, well then it's hardly surprising that when you get the S&P Global's worldwide measure, the global PMI number that they put out alongside JP Morgan, you end up with a 17-month low on economic growth. And here's that pop in manufacturing around the front running of the tariffs. You can see it here. But that's hardly the bigger story because, again, that's a smaller piece that is services, and we can clearly see here, services has been steadily slowing, especially since the beginning of the year, and is now at the weakest levels we'd seen since the latter part of 2023. Take a look at the breakdown of the components. None of it is especially encouraging. Output growth, much slower. New business growth, much slower. New export growth has gone from growth to contraction. Future output, that is a measure of sentiment, sharply lower. Employment from growth to standstill. Outstanding business was shrinking, is now shrinking at a slightly faster rate. Input price inflation weakening a little bit, ostensibly because of demand destruction, but output prices actually accelerating, as if to flag that stagflationary risk that has come out of both the U.S. Activity surveys, the ISM and the S&P Global, as well as the Fed itself when Jay Powell spoke this week following the FOMC monetary policy announcement. Why do we care about this? Well, clearly we can see that this composite PMI globally has been a pretty good approximation of where global GDP is heading. And the trajectory here seems to be that the path of least resistance is still down. Come all the way back to where we are on markets and consider that if the path still is toward recession, if the US and China have converged on standstill where Europe was waiting for them and the global economy has not started to improve yet, then there is a long tail to any negotiation to really put this recession monster back into the box. And so it becomes very difficult to envision how you don't get a global recession in this environment. Now, maybe there's a China deal this weekend, or at least a very cordial meeting with a clear sign of an off-ramp, but the damage has been done. And it will take months in terms of recovery to even begin to see that there is a dip, and then to envision that after that dip, there will be a rebound. And maybe that's enough for sentiment if a deal is done. But as this posturing continues, the economic weakness that is the foundation, while the posturing goes on, suggests that the recession is very close at hand. And the question now is, can it be managed to something mild? And something that sentiment need not be worried about. And if not, well, then it's what we were worried about on the way to exactly where we are now. And although the proverbial holy moly may be over, this part of the story is still very much in play. That's Macro Money for today. We're here Monday through Thursday, right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. That makes this the last show of this week. Macro Money will be back Monday next week. I'll be on with Chris for Futures Power Hour tomorrow and on Mondays, as I am every week. I'm on with Victor Jones for The Price of Truth on Tuesdays, back with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Thanks for watching. Macro Money's back next week. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
What is going on, everybody, and welcome back to Risk and Reward with Gus and Errol. Really volatile day in the market. I know there was a lot of anticipation with Trump, a lot of conversations. We'll get into all of that. Going to be talking about student loans today, so I'm excited for this topic of the day. But my brother Gus, how we doing today? We'll get into it here in a moment.
Yeah, doing good. It should be a fun one. I agree. I got a haircut scheduled uncomfortably close to this stream, so
Okay.
I'm gonna be booking it out of the studio once we get off here. We'll see if I'm able to make that turnaround or not. I don't know. But other than that,
What kind of
feeling
haircut?
good.
Like length?
Just length. I just need to get it cleaned up. I try to keep it like just above my eye, so I'm well
Yeah.
past that level. But
Well, now we know. So whenever it gets to that level, everyone, myself including chat, we're going to let you know it's time.
it's true, and I'm like, I don't know, it's overdue. I'm probably like 2 weeks past when I was supposed to go back. I try to do like every 6 weeks, every 8 weeks, something like that. So yeah, reining it back in. But yeah, good day as a whole. Nice bullish day in the market. Kind of spearheaded by some positive comments from Trump surrounding the UK trade deal this morning, and then everything else to that end. But yeah, portfolio is mostly long delta with a lot of shares. So when the market goes up, I look like the greatest trader alive, and today is one of those days.
I hear you. I have such an extreme short bias, like we've talked about over the last couple. You can just tell I lean short, and I'm glad the other day we ended up throwing on that long Apple and that long, what was it? Was it Meta? Another underline we had thrown. So we got more long delta on, even though I wasn't feeling like getting long, but it definitely saved me in case something like today happened. You know, today happened and those positions are able to hedge the existing positions that I had on since I was leaning such short negative delta. But that's how it's going for me on my end. If we have enough time, we'll get into the platform, chop up a little bit more of these trades. Anything new though? Anything new you've been eyeing? Anything new you threw on that we need to know about?
Yes. Yes is the short answer. I picked up Match.com this morning. Very similar sentiment to what I was talking about this past Tuesday. I posted it in the follow page, but the idea is just that they just had a very strong earnings call with very strong numbers and what seems to be bullish forward guidance to me. And they dropped almost 7% this morning. It's sort of a sentiment dip. Bumble fell off, and so people believe that Match is following that. But Match.com is Tinder, Hinge, and then they have like 2 other sites as well. But I really liked the way that the earnings call went. They said that they're doing all sorts of different things to try to address the slowdown in their users. They found that holistically society was growing a little bit tired of dating apps, and so they're trying to find ways to shake it up, something that I saw that I didn't know existed. I'm not on these dating apps, but on Tinder apparently now they have a double date function where you can like group up with a friend, like a buddy, and then find 2 other friends that also want to go on a date. And they said that they've seen success with that. Numbers are steadily climbing back up. They beat revenue, they beat EPS, fundamentals look sound, and I say it all the time, America is getting lonelier. So I'm bullish there, but I added some shares in the dip, and then I also picked up some pretty serious leaps. September 19th with 20 is my critical strike there on some verticals. So feeling good about that one. That's a spot.
That's a really interesting feature function that they added. At first, right off of hearing that at face value, I was like, "What? That's weird." But then when I think about it again, that would make a lot of sense. Number one, breaking the ice, meeting strangers, and also, if you're anybody for that matter, but especially if you're a lady and you don't want to go meet somebody randomly, you want more of a group setting. I can see why that might be beneficial. Super different. It reminded me of the Uber share ride where you can share rides. So that's what that feature reminded me of. But really interesting to see how that landscape's adapting.
I have questions about it. I would actually like to know a lot more because how does it work? How does the initial messaging phase work? Who's talking to who? Are you guys independently deciding which of the other pair you want to go out with? I don't know. I have more questions on that front. But holistically, I think it's a cool idea. And then the other thing that they're implementing, which I think sounds, dystopian and kind of a little strange, is they have like a AI voice agent that you can practice flirting with. It's called Game. Which is very odd to me. I suppose I wouldn't fault anybody if you need some reps. Apparently it is pretty well done. But seems a little strange. I don't know if I would sit in my bedroom flirting with an AI for practice. That's
this kind of ties into the conversation that we had a day or two ago where we were talking about there's a difference between communication and socializing. And it's looking like there's being some efforts for that social. So AI is playing a role in terms of sharpening your social skills. So what can AI not do? Impressive nonetheless. We'll see how those things pan out. But dating apps, extremely popular. Not on one. I would get in a lot of trouble if I was on one, but no. I love it. We'll go ahead and jump into these slides here as we chop it up a little bit. I know, the topic of today is going to be student loans are back. Student loans are back. What do we think about this so far, Gus? I know we had a little bit more conversations about the resumption of a lot of these things and the potential consequences as we're about to get into it. But when we talk about this topic, what first comes to mind? What do you think? What do you feel about this?
Yeah, student loans. It's been a long saga. Began in 2020 with all of the other COVID craziness. Payments technically resumed in 2023. Then they kind of technically resumed in 2024. And now they're really resuming in 2025. Complex, nuanced thing. We have a very wordy first slide to set up the timeline on all this, so we're all clear-headed in. But I don't know. I think it's interesting. I feel for those who have defaulted on their loans or who are now going to have an additional expense added to their monthly or weekly expenses, however they may choose to amortize it. But at the same time, I kind of see the other side of the coin where I'm like, man, if you haven't made a payment in 5 years, maybe this is on you a little bit. So it's an interesting topic with a lot of nuance, some implications on the broader economy, and we're excited to get into it.
Absolutely. So President Trump has ended the suspension of student loan payments. Here's what it means for the economy.
Yep. So first of all, let's set up this timeline. initial pause on student loan payments in general began in March of 2020 with the CARES Act, which was passed by President Trump at the time. So that effectively lasted for 3 years until September of 2023, and there was an extension by the Biden admin in the middle there. But until September 2023, when loans began accruing interest again, but payments were still not due until really September of 2024. They started accruing interest September 1, 23. October of 2023, you were supposed to resume payments. But until the end of September 2024, they had this 12-month on-ramp period, which is specified here. Borrowers were shielded from certain penalties. It couldn't hurt your credit, and you couldn't default, was the situation. So basically, you didn't have to freaking pay until September of 2024. April 30th of this year, 2025, marks 6 months since that on-ramp period ended. And then the Department of Education is officially resuming involuntary collections on those who have defaulted as of May 5th, which is 3 days ago at the time of this recording. So that means that the Department of Education can now take wages from people. They can get into your tax refund. They can get into your Social Security benefits. Department of Education is going to do whatever they can to start actually collecting on these payments once again. And we have 5.3 million borrowers who are currently in default, meaning that that would be you've defaulted. They defaulted sometime in that on-ramp period or sometime into 2025, but you couldn't default in that on-ramp period, so you didn't technically default until April 30. This stuff is it's a very nuanced timeline. But the point is, pause began in March 2020, and we are officially, actually, for real, resuming student loan repayments right now, and the Department of Education has the authority to garnish wages, taxes, Social Security to make it happen.
No, absolutely. I think, like we talked about with inflation, interest rates, all those topics that are very prevalent right now, just like tariffs. I think whenever these things come about, you become extremely educated on these topics. And I think, now that this is going to be a very common topic because it's being resumed, I think a lot of people are also going to be getting educated, like myself. Like, again, there's just very small, starting, pausing. What does that mean? So I know there's little intricacies that I picked up on and have an even deeper understanding on, just because this topic is very common right now, and we're talking about it, we're researching about it. So, this is going to have huge implications. So I'm excited to see how those are going to pan out. We got Donald Trump and Joe Biden right here. What do we got on this one?
Yeah, smiling Trump and Biden here. As I said, Trump initiated the pause in March of 2020. Congress extended it, and then Biden extended it slightly further, but it eventually became too much of this giant outstanding bubble of loan debt. There was budget issues, legal pressure and also some lobbying from the people who stand to gain from these loans being repaid. And SCOTUS, the Supreme Court, struck down President Biden's notion to fully forgive student loans in 2023. So essentially, with all of the nuance that we just outlined in the first slide, we are still basically just on the end of the original framework that was set up with the CARES Act in the first place, with some slight modifications. But this is the timeline. This is how things were supposed to go. And once again, I kind of circle back to my original point of not only did you know this was coming, you had 2 or 3 extra years on what the original timeline was. This is not a surprise. Is really the point here.
Yeah. Chad says, thanks, Donald Biden. There we go. 100%. There's a little bit more context on these student loan repayments, but let's talk about some groups that'll be affected. Recent graduates, obviously, 2019 to 2023, especially, many of these borrowers entered repayment during the pause and haven't had to make a regular payment yet, making the adjustment financially jarring. That's kind of what you just mentioned. It's been 5 years. Have you not made a payment? So it's been some time, and I would argue maybe some negligence to some. And then also, some people probably forgot, like, even just the topic of student loans. It's like, oh, I totally forgot that was a thing. We heard about the pauses, we heard about this, that, and the other. Then we're getting hit with inflation, CPI. Then it's like, oh, yeah, student loans again. Low income borrowers as well. Those earning under $50,000 annually will definitely feel the pinch, especially with inflation still affecting essentials like rent, groceries, and then again, borrowers with no degree. This kind of all of these bullet points really come down to the same bottom line. And about budgets are going to start to get squeezed here a little bit. But borrowers, with no degree, many took out debt, didn't complete a degree, limiting their income and potential while still owing loans. I would say that. And then also, I know we're going to start seeing a lot more shifts in our economic environment. I think this is a really interesting topic. I don't want to go too off course here, but getting degrees that might not be in the job market by the time that you graduate, or even maybe 2 or 3 years after you graduate. Because whenever you're finding a job, you're not looking to have a job for 2 or 3 years. You need some long-term stability. So I think, with the rapid development of the technology that we're going through right now, it's going to be interesting. Like, I don't want anybody to be in a difficult position, but it's going to be interesting to see how, with all these new tools, AI softwares, what areas and occupations are going to be in less demand, and you might be going to a degree. You might be in your second or third year, recognizing that, this occupation isn't even in demand anymore because of the development of technology. So a little off course there, but just going to be interesting to see how these things pan out. But obviously borrowers with no degree, first generation college students, might be, family situations. Everybody's situation is different. We've been, often lacking family financial support, navigating repayment with limited financial literacy or guidance. And again, we're adults. We can't take out these loans without being 18 anyways. But I think it's still important to at least acknowledge, everybody does come from a different situation. Some people are paying for their college while they're in college. And some have the support of parents that some might not, right? This isn't an excuse for anybody to default on it. We're all responsible. We're all adults. But I think during this time, it's going to be important to at least acknowledge that at least. But right.
I agree. I think that that's a very valuable thing, a very important thing to acknowledge in the grand scope of all this. And also, while you are technically an adult, once you're 18, you're still very much a kid. Your brain is quite literally still developing. And I will note that, while I'm kind of, I'm not making light of the situation, but while I'm saying like, how could you default after 5 years? I also understand that it is kind of predatory the way that student loans work in the first place. Colleges will give you bad guidance, will encourage you to get a bad degree that is not going to pay well and to take out $100,000 in loans to do it. And that's what's always been the craziest part about student loans to me, is that if you wanted to get approved for the same amount that you get in student loans, but for a house when you're 18, they would say, hell no, you have no income. We're never going to give you this money. But then for some reason, when it comes to student loans, you're suddenly just instantly cleared to take on 6 figures of debt in many cases. And it is, I don't know about predatory. Maybe that might be too strong of a word. But there's issues with this system. I don't mean to make light of it.
Absolutely. No, absolutely. And I think that's a pretty accurate word. I think we could call it how it is. Again, we are all responsible for the choices and decisions that we make. But just as a nicotine company, they are predatory. It's your decision to go out and buy nicotine, do these kinds. It's your decision. But there is a beneficiary, whenever offering that bait. It's kind of like bait sometimes. But at the same time, we are absolutely responsible for our decisions. And we have to reap the consequences, whether that's positive or negative. Our parents teach us that growing up.
Well, and there's big issues too, I think, with colleges and advisors in college really giving kids bad advice, like about as far as what majors and things that they should do. A specific example that I could throw back to the 1990s for is my own dad came into college, didn't exactly know what he wanted to do, and he decided that he wanted to do geology. He thought geology would be really cool. And his advisor talked him into English, and that's a decision that he has regretted for some time, because geology, you can go oil field, there's all sorts of high-paying jobs. That's a STEM major compared to English, and he found that the job opportunities just weren't there when he got out of college, and eventually he had to circle back in his late 30s, early 40s and get his MBA. And so you get into situations like that where not only are you allowing kids to take out a crippling amount of debt that will follow them for the rest of their entire life, but then also on the other side, the advisors are often advising low-paying majors that aren't ever going to be able to pay off the debt. So it's a very bad system that's broken on a lot of fronts.
Yeah, 100%. And I just like to reinforce the fact that we're all responsible for our own decisions, but at the same time, I like the word predatory that you brought up, and I do think it's accurate, even though it's such a strong, aggressive word, especially with the connotation behind predatory. But especially it being one of the loans that you can't default on, that you can't declare bankruptcy on, that you can't do X, Y, and Z on. And it sounds strategic, right? It sounds like these things were put in place on purpose, and there might be a beneficiary. But at the end of the day, we are responsible for the things that we sign. We're responsible for the decisions that we make. We have to reap the consequences. And like we just heard in chat, it's just how you went through life. So some broader economic implications: reduce consumer spending. I think this is also a strategic move as well. I think the economy, I think that reduced consumer spending is a little bit calculated, but borrowers diverting hundreds per month to loans means less spending on retail, dining, travel, and discretionary goods. Maybe we might even see an even more of a slowdown in inflation because of things like this. We also have housing market pressure. First-time homebuyers might delay purchases due to tighter budgets, higher debt-to-income ratios impacting demand in the housing market. Right, this is going to be a tough situation if we get that time window that a lot of young people were looking for to take advantage of the overpriced housing market. And, this is going to kind of shrink that pool a little bit. I was looking to take advantage of that because, again, this capital is going to be needed to go to different areas and whatnot. Credit card delinquencies may rise, right? Many borrowers leaned on credit cards during the pause, which is crazy. During the pause started a while ago. And I know we were just talking about Coachella. About 60% of those tickets were purchased using a buy now, pay later service, right? And then at the same time, right, consumer debt is almost at an all-time high at the same time. So it's almost like we could kind of see these things brewing about 4 years ago. Now we're coming to a little bit more of a consensus, but we could definitely see those brewing over the years.
Yeah, absolutely. And yeah, I think these are all great points, and especially the housing market pressure. First-time home buyers is already a market that is dwindling. There's no shortage of complaints about that circling on social media, and for good reason. Housing prices have vastly outpaced wages in the United States over the last 20, 30 years. But you're talking about now shrinking that pool even a little bit further of what was already small. So it is an interesting spot, to say the least.
Absolutely. As we jump to this next slide here, someone said some parents should be parents. Yeah. I know for myself, I don't know about you, Gus, but I know, many areas that I need a lot of improvement of, because I also know, whenever you're bringing a child into this world, number one, you need to be able to guide them, direct them, and teach them. And I think the experiences that we go through in life, is just equipping us for the tools to be able to do that and actually guide another human being. So I think some people are also, just again, born into different situations. And it's not the fact that, I know we're getting some comments too, it's not the fact that people don't care about poor people. I think it's more so, I think a lot of the time what it is we struggle with certain things in our life, whether we're in our 30s, 40s, 50s, 60s. So we also see, I struggled, other people, so we all feel it. We're all kind of in this together. We all have moments where things are tougher than other times. But just back to the parent comment, it is important. A lot of these things, a lot of these issues do start from having good parenting, and at the same time, in a lot of cases, not really, because I know there's a saying too, and again, not to get off track, it is all about perspective, because there's that one saying, right? There was a dad, there was two sons, there was a drunken dad, two sons, one became very successful, the other one became a drunkard just like his dad. They both were asked why they were in the position that they were in today, and one said, because of my dad. The rich guy said, because of my dad, and the poor one said, I'm like this because of my dad. So at the end of the day, we do get to choose our choices and choose a perspective that we want to take. But as we get into this last slide here, what to watch next? What does all this mean? Does this mean the market's going to boom? Is the market going to crash? What does all this mean? What can we even expect? Delinquencies, default rates. I know we're kind of talking on the same touching points, just from a different angle, but early data on missed payments show how borrowers are coping and could trigger changes in service policies or some political pressure. Spending behavior shifts, like we just kind of talked about, consumer spending going to be going down a little bit. And I think that ties into spending behavior shifts. Watch earnings reports from consumer facing companies like Target, Walmart, especially Starbucks. Watch out for Starbucks. And then impact on inflation. Less consumer spending may help ease inflation slightly, especially in services and retail sectors. Great topic, very educational. So we'll see what pans out of this. Any other thoughts on these last couple of slides here, guys?
Yeah, I think it's a very interesting and changing labor market. And I also think that it's very interesting that the labor market is in some ways shifting back towards college degrees not being as essential anymore. Still an incredibly valuable thing, and we're still a long ways away. But with how much easier it is to be a self-starter in the age of the internet and the age of social media, there are lots and lots of avenues that you can take to be successful with no college degree, or there is no shame in trades. I'm always saying this. I'm from Texas. There's no shortage of blue-collar boys down there. And I'll tell you what, there's people that went to trade school right after high school and have been making close to six figures a year for all 4 years while I was in college. The entire time they're making that money, and they're doing really well. You can circle back and go to college later if those things start to weigh on you. So I think that it's really become this cultural thing where we feel that You have to force every kid to go to college, and it's absolutely essential, or you will be a deadbeat. And it's just not really the case. If you don't know what you want to do, don't take out $100,000 in loans to major in something that's not going to make you any money. You know, you can take your time and find your passions and decide the real right angle that you want to take. So, it's just. It's interesting, big nuanced thing. But as you said, at the end of the day, everybody, and as I saw in chat as well, everybody has to be the CEO of their own life. If you make mistakes, and you got to just roll with the punches. It's not how hard you get hit. It's how hard you can get hit and whatever.
Moving forward. I got you.
It's not how hard you can hit. It's how hard you can get hit and get back up and keep fighting. That's what I'm looking for there. Jeez, I really lost my train of thought in the middle of that one.
No. All good. But this weekend is Mother's Day. If you guys have a mother and you're able to call them, don't forget, order some flowers from now if you need to, or whoever might have been that mother figure in your life. So let's remember that this weekend. And anything else to add before we hop on out of here today? I love talking about topics where you can actually give or that have some meaning behind, or very educational, and also just getting different viewpoints. I love talking about these things. So.
Yeah.
Anything else, guys?
No, it is always enjoyable, and there's lots of conflicting viewpoints going on in the chat here, and I think that's the beauty of talking about these things. I agree.
100%.
Yeah, I think that the discourse is the most important part here, and it's really important to get and see all these different perspectives. It's going to be interesting to see. And I also, this impact on inflation, I think that's a very good point, is that maybe in the grand scheme of things here, this actually could knock down inflation a little bit. So that's an interesting touch point there.
Yeah. Well, lastly, I was listening to an audiobook. I can't remember who said it, but there was a great point. I was like, wow, that is really wise. I want to implement that. There was the quote said, I don't like to have an opinion on something if I don't understand the other party's argument better than they do. And I was like, wow, that was some wisdom for even me to hear, to really start diving into other people's opinions and understanding why they have that. I might not agree with it, but let me see where they're coming from and why they feel so strongly about this. Might not change my mind or my opinion, but let me see where you're coming from.
Well, yeah, and I think a very powerful mindset, and something that actually has fundamentally changed my life, is that it is okay. It's totally okay to say, I'm not educated enough to have an opinion. And in the age of the internet, it feels like you're not allowed to do that, and it feels like you have to be an expert on every topic and argue with all these people on all these things. Everybody has a voice, and that's a good thing and a bad thing, as we've discussed in previous shows. But I think that add that to your vernacular. It would be a piece of advice I would give to anybody. I'm not educated enough to have an opinion. I use it regularly because there's so many things going on all the time that so many people have opinions on, and often I don't really know enough to speak on it. And so I think that's a prevailing issue. Also, I'll float something else totally random here. This is going to really derail things, but I saw somebody mention 1-800-Flowers. Do you know about the Katy Perry Act in California? This is something that I just recently learned about.
Enlighten me.
Yeah. So Katy Perry has 2 instances where she has sued super duper elderly homeowners, like owners of mansions, and then just like drug them through the mud and created all these court costs. There was one from 2015 to 2019 where she was actually trying to buy a convent, a former convent full of nuns. And there were 2 nuns who were very outspokenly against selling to Katy Perry. And one of the nuns actually died in court, like from stress, because she was in her 80s. And then after that, she tried to buy, and this is the tie-in, she tried to buy the mansion that the CEO or the founder of 1-800-Flowers owned. He was 82 at the time. And then after he had signed, he said he wasn't of sound mind because he was on a bunch of medication and tried to pull back on it. And her and Orlando Bloom drug him all the way through the mud until they finally got the house. And then they sued him for another $6 million in damages because he tried to go back on it. So anyway, there's now this law in California called the Perry Act, which is like Perry is capitalized. It's a whole acronym. But there's a fun fact for you all. Katy Perry is out here suing elderly people for their houses, and it's working.
Thank you for that. I need to learn something new every day, and I definitely want to have learned that on my own. You're putting it out there. That's crazy.
Yeah, I saw an Instagram post the other day and had to back check that. But that is all factual shit that actually happened. So
wow, that's insane.
Don't give Katy Perry the streams, guys.
Don't do it. Also, if anybody watched the Nuggets game yesterday, no, you didn't, and we'll leave it at that. That's going to wrap it up, guys. Thanks for taking the time to chop it up with us a little bit today. on some of these topics. Of course, we'll be back. We'll have an update on a lot of the positions that we put in. We'll be back with another risk of the week, adjust those positions, give a breakdown on them. But that's going to do it for today's stream. Be sure to stay tuned for more coming on next. We'll catch you guys next time. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
If you missed the live show, here's our cherry on top yearly recap.
Breaking news on Instagram. The first segment of your line dancing has been posted. Left together, switch, turn. Right together, twirl, turn. Hip, hip, hip.
Right together, spin, clap. Left together, spin, clap. Hitch, 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 turn, shuffle, rock, shuffle, rock, shimmy.
I took 5 lessons for Casey's wedding, and all I knew how to do was
Right together, spin it around. Yup. And you want to clap. And then strut down, strut down, strut down, strut down. Right together, spin. Left together, spin. Hitch, 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 cross, turn, shuffle, lead, shuffle, rock, shimmy, lasso.
this is not good.
Hey! Oh, he's got the walk down. He's got it down.
It's perfect, and you got the bag. You got everything.
That is not even close.
God, bitch stole my. Oh, it's flawless.
Look, it's beautiful.
Flawless.
No.
You're walking way too fast.
And go stick your finger in all of our lunches.
Now complain about something.
Oh, God. You watched the debate. You knew who won, and you just didn't want to admit it.
I was in New York. I was flying home that night, and I'm so sorry that I didn't go back and tape the vice presidential debate.
First of all, I think it's hilarious that you run a technology company and you still think you think you had to tape it in order to watch it. You think you have to tape it?
He didn't have a blank VHS tape to spare for the debate. Stas, what comes up next? The opening bell. Don't look so surprised, Sadlov. It's been this way since 1980 when you first started trading. Wait a minute, was it always 8:30? Yes, the opening always was the same. The closing has changed.
Like, what has changed? I don't think so. Nothing's changed. The only thing they did, I think, was add the 15 minutes.
Excuse me?
The only thing I ever think that changed was the 15-minute curb session.
From 3 to 3:15, so they did change it. So it was the closing and not the opening that's changed.
For option traders, the 15 minutes.
Well, listen. We're not bean traders here.
Do not engage.
Wait a minute. So
when I got in this business,
we used to open it. We used to open at 9 o'clock. Since 1980 to now, we didn't always open at 8:30 in the morning.
Yes, we did. Is that a $20?
I am going to get this $20 off of you.
I don't think so.
No matter what. Chris, how are you, my friend? Chris, your job after you get off the show here is to find out when the New York Stock Exchange opened in the 1980s, what time they rang the bell. I have a $20 bet with Sosnoff. We're going to be eating good tonight. I already decided that Sosnoff will be having cereal for dinner tonight. I said the New York Stock Exchange did not open at 8:30 Central Standard
Time was changed to 9:30 a.m. Eastern.
Pay me,
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Oh, yeah. It is Thursday, May 8th, a little bit after 5 p.m. Central Time, the best time. You know what that means? It's time for Tasty Live's evening show, a little podcast, a little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. And every single day I say this, but we are getting our money's worth. Lots of incentives to explore. Before we do it, we should say what's up to the people. Shout out to everybody watching on Tasty Live desktop. tastylive.com. Shout out to everybody watching on Tasty Trade mobile and desktop applications. If you don't already have both, do yourself a favor and go get them. But if you want to be a part of Bing, this little guy, this little chat in the middle of your screen, there's only one place to do it. And that, my friends, is over on the evil Google YouTube. So head on over there, subscribe to the channel, find the Tasty Live channel, and hop in. Start bashing your metacarpals, your phalanges, your skull even against the keyboard to create random ass characters and spoof the Google algorithm into putting us in front of as many people as possible. Should say what you rascals are in the chat. Let me say what's up. Oh, I'm gonna sneeze. I can tell it's coming. What's up, Catan? How are you? Big Deal, Sleepy Mocha, Lone, Brian Watson, the GOAT of YouTube. What's up? Mark, how are you? Cato, Emmett, Theta, Lincoln, Joseph, Jay. What's up, everybody? I can't quit you. What's going on, everybody? My apologies. First and foremost, my apologies for not being here yesterday. Was it yesterday? I forget. All the days are running together. Yeah, a little medical situation at home. So I was in the hospital for yesterday. I got back a few hours ago. So my apologies. All is a little bit better on this side of the aisle, not me. One of the kiddos. But there's lots to talk about. Of all days to miss a Fed day, of all days to miss, I miss a Fed day. But quite honestly, if I was going to miss one Fed day, that was the one to miss. Good God. Could you, what a waste of a conference. I said this on Twitter, but what a complete waste of time that was. Let's talk price before we get there. S&P 500 up a little bit more than 0.5%. The NASDAQ up about 1%. The Dow Jones up 2/3%. The Russell, the little engine that could, up nearly 2%. And it's funny, man, you're starting to see a little bit of that, a little bit of the quote unquote broadening out. Every time that trade threatens to strike, it gets squashed down with reckless abandon. But a little bit of Russell outperformance here, and I'll get to stocks. I promise you, I will get to stocks. And there's a lot of stocks to talk about, a lot of sector stuff to talk about. But before we do it, do you mind if I just tiptoe? Let me dance over to ever so slightly to the bond market, because every once in a while, a broken clock is right. Approximately twice per day. But the
the curve, the 210 curve has come in. Does anyone see where it's come into? About 47 basis points. And does anyone remember when, right as the Trump administration was starting to soften the rhetoric, we were at 65 basis points. And I said, if the market believes this, if they believe this rhetoric is going to turn, I think we could see a flattening of the 210 into 45 basis points. I got short the twos. And I don't know. I've been picking my spots on the back end of the curve, but I just, every once in a while, it's fun to see these things work out. And so the 210 is back into 47 basis points as of today, my babies. And that mostly has a lot to do with the market repricing those twos. Has a lot to do with it. Pull up the curve in front of you guys. So we've seen this short end of that curve lift quite a bit. We're back up to 3.88. Obviously, the Fed sort of dragging its feet, doing whatever they were doing yesterday. A whole bunch of absolutely nothing. The market just, would you ever call a press conference just to tell people how much you don't know, how much you're uncertain? You know what I mean? Somebody said the funniest thing. Somebody said that could have been an email. I thought that was so funny. But anyways, the market had long expected June to be the continuation of this cutting cycle. The market no longer believes that. It's given it about a 16-17% chance of that happening, at least today. Probabilities are dynamic. That can change tomorrow or with the next data release, the next press conference, who knows, the next tweet. But at least for now, it seems like the Federal Reserve is communicating that they would prefer to let the data tell them to move. Now, whether that means they're actually here's what I think that means. That means they are waiting for the unemployment number. They're waiting for this little guy. So what is our current unemployment rate? Something like 4.2%. So when some of you guys get fired and this number gets up there to 4.4 or something of that nature, then they'll move. That's kind of the way I interpret it. Or if this number gets scary, the GDP number. Until then, everyone's scared. At least everyone's pretending to be scared over there at the Fed building. They're pretending to be scared of tariffs. So we got a decent flattening in the 210 curve. What does that also mean? That also means a little bit of trust, I think, in the pieces of paper, the greenbacks that the United States issues, I suppose is the way that I would frame that. Just a little bit of trust. So gold off just a little bit here today. The 210 flattens. And then what I had also started to play was a short euro, short 6E. And we got a nice little break, a continuation of that today. And I think that's the trade in the very short term, in my personal opinion. I don't know what to do with equities necessarily. That's a hard one. But long dollar, flattening of the curve, and I don't really know that I don't want to play the short gold again. I think it could be very lucrative, but I think it's a hard short here. You know, it was a lot easier to pull that trigger at 3,500. I think it's harder at 33. But I'm also long silver. I don't know if I should be long silver, but I do think the gold silver ratio comes in. It was more than 100. I don't know if it still is more than 100. But I think that gold silver ratio could normalize, not will. I think it could normalize here. I like playing it to get back down to 90. So the question is, if that's true, and that's a big if, but if that's true, how do you normalize? Do you normalize by silver rallying, or do you normalize by gold selling off? I suppose both those could happen at the same time, but I'm hoping that we get a little bit of a silver rally out of this. And so those are kind of my plays. This silver rally is not really working out. That's of all of them, that one has not worked out over the last 2 days. So that's been a little bit of a dud. Let's see here. I'll read some of these. No yesterday's show and no this morning. Thought Victor was gone. Nah, man. They're just, Tom and these guys are super flexible, and they had to, had some stuff going on. My comment didn't make it to the feed. CCP interference confirmed. I don't know what you're saying, though. Appreciate that, Emmett. Trump tweets seem to have more effect on market. No, man, that's not it. It's not it, people. I'm telling you. Stop. Do not do this thing where we overly simplify what's happening. It's hard. I had a conversation on Twitter. It's really, really, so here's what I think. I think we live in a very, I think we're living through the fourth turning. There are moments in time when the entire global order or the entire either monetary system or global order in general is sort of reorganized. Bretton Woods, you could argue, was one of these periods in time. Nixon in 71, leaving the gold standard. When was that? August 15th, leaving the gold standard. Maybe to a smaller extent, like the Plaza Accord. I don't think that was to the same extent, but we've gone through these big periods of reorganization in the past, and we're living through one right now. And that, I think, there are people that understand that, explicitly. They understand it. And then there are people that don't understand it explicitly, but implicitly, they kind of look around, they go, there's a lot of change here. You know what I mean? Prices are changing, governments are changing, the news is changing, medicine is changing. The social contract feels to be fraying a bit. So I think people implicitly know that there's a bunch of change, and that makes you nervous. And when we get nervous, we try to we cling to things, we cling to these totems to help us feel safe. Some of those totems might be, it's all the president's fault, right? And man, we got to get that guy out of there and get a new person in there so we can restore order to the world. That's sort of this overly simplified totem that makes you feel safe. It's wrong. I mean, you definitely might want a new president, but to put all of the problems of the world into these singular totems, that's sort of this mechanism of our brain. And it's not true, or we overly simplify a narrative wow, the market's moving on these tweets. It's not. It's in my personal opinion, it's bigger, it's broader, it's more complicated than that. And I think to step back and see the bigger picture here, that no matter how much you don't want this to happen, it is happening. You know what I mean? And you can argue whether it's the result of one person or it's the inevitability of incentive. It's the inevitability of how a debt-based monetary system works, that there are constraints in that system. And once you reach the constraint, you need to reorganize or change the rules to allow or get past those current set of restraints. And I sort of believe the latter. I believed for several years that we were headed towards an inevitability that must be dealt with. And in my personal opinion, it wasn't going to matter who was in the White House. The only question was, how do you deal with that inevitability? But But I say that just to say this. I do think what we are living through right now is really complicated and it's highly uncertain, and the distribution is wide. And I think it behooves everyone to do their best to get outside of whatever individual confirmation bias we have and to try to see a bigger, more complicated, richer, more nuanced picture of what's happening when we look outside. Because it is big, man. Edward says, Vic, tell us the truth. I don't get it. Hey, Victor, we were about to put your face on milk cartons. The unanimous vote, though, Victor, very intriguing. It's always unanimous, Catan. It's the new pope from a sanctuary city. Catan, it is. Yeah, Bitcoin over 100,000. You know, we kept saying on this show, man, we right here, right here. You see this big highlight? You see that big area we highlighted where we said, this is interesting. This should not be happening. Theoretically, it should be much weaker. It's staying in this tight range. This thing looks like it's coiling. I don't want to freak out on the existing long trading position. Let's hold it. And isn't it weird that this thing moves to 90? Nobody's saying anything. It's moving to 95. Nobody's saying anything. This was like huge news just to get to 69,000 a year ago. And now, very quietly, the only people talking about Bitcoin were the people that are in that community, which I think is interesting, right? It's always the moment that you need liquidity. That's the moment this thing's going to start showing up everywhere in everyone's feeds and on the news and all that stuff. Isn't it funny? Isn't it funny how it's real quiet when it seems like we're in an accumulation phase? No, nobody's talking about it. At least your cab driver's not really talking. Your Uber driver's not talking about it. Super quiet. Then we'll reach this point where it seems sort of, this is crazy. This number's crazy. This seems stretched. Then all of a sudden, it explodes. It's all over your social feeds. It's all over the commercials. Your Uber driver's talking about it, and guess what comes next? But we don't seem to be anywhere close to that. And it's not just price, man. It's like the amount of deals that are being done in this space. You know, it's like everybody knows. It's almost like everybody knows when Trump and his own family are positioning in Bitcoin, and you kind of look at his economic policies. I posted some video. I think Yanis Varoufakis, the previous finance minister in Greece, a guy whose opinion I respect very much, and who wrote a great book called Techno-Feudalism. He's been really sort of articulating what he sees as sort of the goal of the Trump administration from an economic standpoint. And this is one of those things too, you know, when people just go, this is pure chaos. It's like, no, you're in the algorithm that is feeding you that narrative. Because there actually is, in my personal opinion, if this guy who is not a Trump supporter, he's not a Trump apologist in any way, shape, or form, if he can sit down, and this is, you know, he's the former Greece finance minister. There's a joke in there somewhere, but he's a really smart guy. And if he can sit down and objectively explain sort of what the objective is, then perhaps the person who's going, this is just crazy, it's a monkey pushing buttons, it's like, maybe you're the one who's really, really far off on this. Maybe you're getting fed just spoonfuls of you know what. But here's the point. The goal here is to significantly devalue the dollar and still somehow hold the reserve currency of the world. So that's a tough thing to do, to devalue and hold the reserve currency at the same time. And if you look at sort of his moves, right? He launches his own coin. He's, he creates a Bitcoin strategic reserve, which is really just holdings of Bitcoin right now. You could look at that and you go, oh, he's just rewarding the crypto people from giving him money. And you're like, or his economic policies are going to weaken the dollar. And if it weakens the dollar, it's good for a certain class of financial assets. And if it's good for a certain class of financial assets, then why not get long? Now you can have that argument that that's personal or self-enrichment all you want to, and I'm not gonna argue against it. But I am going to sit here and say that the amount of deals and money that's going into the Bitcoin space, the amount of people that are interested in it from a national sovereign point of view and perspective, it is bubbling each and every day, man. And this isn't just FOMO stuff, This isn't just FOMO stuff. This is like real business. This is real accumulation right now. How many Me Too companies have you seen that are doing something similar to MicroStrategy? I've seen a handful already. Sometimes I think about a world like we kind of have two tiers of money right now. If you have enough money, then money in your world is, well, I can argue sort of illiquid assets, but let's put that to the side. There's like treasuries and then there's dollars. But I could see a world where two classes of money, Bitcoin and then central bank digital currency, which is effectively a dollar, but it comes with more control. So if you have Bitcoin, it's in a sort of an asset that holds its value against a depreciating dollar. The depreciating dollars are given out to the poors, It's a thing that once AI disrupts the entire sort of labor structure, it's just like, all right, there's not as much room or opportunity for productive purpose. So here's your UBI units in central bank digital currency. But you only get them with compliance and obedience, right? And if you have enough Bitcoin, you're not subject to those same rules. Because you're not relying on its issuance, the CBDC issuance. I know what I'm saying is crazy. I'm sorry. Sorry for going down that rabbit hole. My point is I would, you could look at this and go, this is a retest, a double top for some to distribute out of their 100,000 position. That's not the way I'm betting. I bet this thing makes new highs. That's the way I'm betting. And, oh, by the way, we had that discussion. I forget now because the days all run. I don't know if this was last week or this was early this week. But I think we talked about, I talked about how I wanted some longer-term, stupid upside Bitcoin exposure. And then we talked through it, looked at BTC futures, but the options, one, are not, they don't offer the greatest liquidity. But then two, they only go out like 80 days. So you can't get much long-dated exposure. MBT is even worse. I think there's only one series. Yeah, one series of 50 days. So I ended up going with IBIT and just bought some D2025, so some longer-dated upside calls. So just letting you know, I ended up pulling the trigger on that. And this could I didn't get a great price, Maybe if I would have thought through this and put that bet on 20 points ago or 10 points ago, it'd be a lot smarter. Here, I don't feel great about it. It feels like a little bit of a FOMO at 57. But I didn't put a ton of money into it. Just a little lottery ticket. Taif says, at Victor, bear market rally, my friend. That's the way that I'm positioned. That's the way that I'm positioned. But the problem is, Taif, I'd feel more comfortable if when you said those words, like when you say bear market rally and everyone calls you an idiot, then I feel like we're closer to a top. Like when I was talking about getting long exposure when the markets were S-ing their P's down at 5,000, everyone called me an idiot in the comments. Everyone said, you're an idiot. You don't know what you're talking about. You're an apologist. What's wrong with Victor? How can he not see what's going on? I saw that all the time. And it was almost like, it almost made me even more confident that was a decent risk reward. And the problem is here, this is pure anecdotal sentiment. So there's no hard data behind this. But the problem is here, I hear more people calling this a bear market rally than those that sort of are confident in the rally. And that's a problem for me from just pure anecdotal sentiment. I would much rather a bunch of people say, you're an idiot. That was just a fluke 3 weeks ago or 4 weeks ago now. And you missed all those prices. And now you're just hoping it goes down so you can get lower prices. I would much rather that be the stuff that I was hearing. But too many people are calling it a bear market rally, which means if you're calling it a bear market rally, probably means you're underpositioned right now. And if there are enough people who are underpositioned, then the pain trade is actually up. It's not down. And the market tends to go where it can inflict the most pain on the most people. And if most people are underpositioned right now because everybody knows this is a bear market rally, then this thing goes dumb higher. This market goes stupid higher until it makes you a believer, and then we roll over. All pure anecdotal sentiment stuff, the psychological warfare that you play with yourself inside your own mind. I do agree, but I think the way I'm playing this is a barbell. That's why I own that's why I want to own dumb Bitcoin upside, because if I'm wrong, then the high beta stuff is going to go dumb, stupid to the upside. And if I'm wrong, there's still a chance that Bitcoin doesn't get murdered. There's a chance. So I'm playing sort of in the equity world. I'm mostly neutral. Same thing I've been, like maybe a couple hundred portfolio deltas to the upside, not much. And then, but I am long Bitcoin to trade as a trade, not just a long-term investment, but I'm long Bitcoin as the barbell, the high beta upside, so that if I'm wrong, well, I'm not going to make as much on the portfolio deltas that I would have because I put a hedge over the top. But this long Bitcoin is high beta, so it should perhaps help me with any missed long deltas. That's sort of my thinking. Tungsten, how are we feeling about equities today? It hasn't changed, man. It hasn't changed at all. I think the administrator, if they get their wish, they would like to keep peppering the market with a lot of these trade deal announcements. But in my personal opinion, I think yeah, like if getting these trade deals announcements is a surprise to you, then you were just on the wrong side. You were just too pessimistic. You were too the Great Depression, 1930s repeat. Like you were way off sides. So to me, these announcements are not a surprise. What I'm more interested in is any details in these deals themselves, which I'm not seeing a ton of yet, but I haven't had a ton of time to go through them. But I sort of think that's probably good. I don't know how much it does for you in sentiment, right? As soon as you confirm the talks with the Chinese, Okay, you got to deal with the UK. Let's take a look. Well, the UK was only a 10% tariff anyway. It's a signal that to me, this is a signal. They reinforced that 10% is going to be the floor. The markets were right. It's at the very beginning. The markets had priced about a 9 or 10% tariff. And to me, the only reason we dump is because the reciprocal tariffs were on some countries were so far above that. The market was way offsides on that stuff. But if you believe that we were going to work our way back, that was all just sort of over-rotating to try to negotiate it back down to 10%. It was the attempted creation of leverage. Then I think a deal with the UK doesn't do a ton to change the market's initial perspective that this was a 10% floor, and you just sort of wonder what they're going to get out of it. I'm going to read a little bit. The deal with the UK keeps a 10% blanket U.S. tariff on UK imports, adjusts tariffs on UK autos so that the first 100,000 vehicles imported from UK car manufacturers each year are subject to a 10% rate, and any additional vehicles face a 25% rate. It creates $5 billion opportunity for new exports for U.S. farmers, ranchers, and producers, including more than $700 million in ethanol exports and $250 million in American beef and other agricultural products. This is the one I knew was coming, especially for Europe, because they have a lot. They have really, from my perspective, they had pretty good laws on what they would. On food safety and food health, they already, if I'm not mistaken, they already banned a lot of these food dyes. They don't import our ethanol and our beef mainly because of what we do to it. And I made this joke before that Americans don't even want this shit. We want to reform the seed oils in our country and the steroids and the beef and the glyphosates on the produce. We don't want this shit. And so I thought, whatever's coming with Europe, I guarantee you that the ethanol business and the beef business, they're leaning into the administration to say, make them take our stuff. So this one doesn't come as a surprise. Commit both countries to working together to enhance industrial and agricultural market access. That's a big nothing burger. That's just a line to pad. That this is doing something. Close loopholes and increase U.S. firms' competitiveness in the UK's procurement market. That's basically saying, in my opinion, that's saying that the UK is not going to, needs to work with the US to not allow China to go through the UK to then export into the US. That line, that's what that means to me, the closed loophole line. And I'm guessing we're going to see that repeated on a lot of these announcements. Streamline customs procedures for U.S. exports, establish commitments on intellectual property, labor, and environment. That's another one to try to prevent IP theft. Secure the supply chain of U.S. aerospace manufacturers through preferential access to high-quality UK aerospace components. So this is interesting. This sounds like a flip. Hold on. Secure the supply chain of U.S. aerospace manufacturing through preferential access to high-quality UK aerospace components. I got to look at that one. I don't know what that one means. Because there's only really Boeing on our side and Airbus on theirs. Create a secure supply chain for pharmaceutical products. I don't know what the hell that means. Most of our stuff comes from either China or Germany. Require the U.S. to negotiate an alternative arrangement to Section 232 tariffs on steel and aluminum. Yeah, so now I need to go deeper into this announcement, but like on its face, there's not a ton here. I don't know. Maybe I'm missing something. Did anyone else go through this in depth and actually see anything in the UK trade agreement that was like eye popping? I haven't had the time to dig into the whole thing other than sort of the fact sheet that was put out by the White House. One of the things I think that came out is that from the U.S. perspective, that there's a new market access to $5 billion of exports. Tariff revenue will be $6 billion in external revenue. UK tariffs were 5.1%. They're now 1.8%. U.S. tariffs were 3.4%. They'll now be 10%. I am reading that. That's coming from some source in the administration. I don't know if that's 100% true. You got to read a lot of this stuff with a grain of salt. I think that airplane or the aerospace line was just about something about Boeing being able to buy parts from them at some cheaper preferential pricing. That's what that sounds like. I don't know. I guess sorry to the Europeans. When it comes to your food, you're about to have bigger humans. Congrats on all that steroided meat we're about to send you. When I first came to Singapore, one of the guys asked me, a younger guy on the desk, he goes like 5 or 6 of you have come over now. Or maybe it was like 8 of you have come over. And he's like, you guys are all big. Why are you guys all so big in America? And I thought it was funny. I just thought maybe a survivorship bias or something like that. I was like, no, actually, he was probably onto something. Anyways, how am I feeling about equities? And it hasn't changed. I just wish sentiment was a little bit poorer right now. So because it's not, I could totally, I was kind of hoping we'd get a 5650 or 5700 roll, with 5800 being sort of where I saw it getting to on the max on the upside. I don't know if I see it that way. I some part of me thinks 6,000 could be in play. I don't want to trade for that. Like, there's no part of me that wants that 120 points in the S&P. So I just got to figure out how to keep my P&L positive if that happens. So the equity part of my portfolio is kind of capped right now, and that's why you hear me saying a lot of other things. What I'm doing with bonds, what I'm doing with Bitcoin, what I'm doing with silver, so that's me trying to find other opportunities to keep my P&L moving in the right direction if I've hedged off the upside in equities. And so the best case scenario would be for a dump, depending on the catalyst, but it would be for a dump to 54 or 52, release the hedge, and look for opportunities again at cheaper prices. That's the beautiful world scenario. But in a not so beautiful world scenario, it's okay. The downside hedge is taking up the money that my long equity portfolio would have made, so I got to go make it up somewhere else. Last year, U.S. imported, this is from uptick, downtick. Last year, U.S. imported 102,000 cars from the U.K., non-issue. Yeah, they have to figure out a way, because if I'm not mistaken, maybe that's the EU, though. That's different than the UK. All right, let's keep going. Catan says they don't want our chicken. Night moves. I agree. They do have higher standards of food in Europe. Not for long. But by the way, much of the rest of the world, not for long. This is basically Big Ag is using these tariffs to say, all right, if America wants to eat healthy, that's fine, but somebody else is going to eat this stuff. Big deal donuts. This is true. We don't want it. I think isn't this the greatest irony? It's like when we, and I say we, just sort of assuming, not putting you in part of this movement, but just saying collectively we have put Robert F. Kennedy Jr. in the Secretary of Human Health and Services role. And could there be any greater irony of exactly when that happens? It's like Big Ag is forcing Europe to eat this stuff. Ironic. So then the question becomes, okay, what happens? Do we change our standards to meet EU's restrictions? Doubtful. Highly doubtful. Or is the more likely scenario that the EU is going to have to relax their local laws to accept our exports? Highly probable. You guys got a lot to say on the food stuff. Hold on, let me read through some of this. You guys talking about Pfizer? Oh man, I lost my place. Now I can't find where you guys were talking about all this stuff. You know what was up big today? EBS. So it's like 34%. Remember that little guy we were talking about? They have vaccines for is it bird flu, monkeypox? Brad Glazer, more anecdotal thoughts. Some of that chatter is just parroting of what I heard the experts say. In my opinion, we are too early in this phase to call this a bear market or a bear market rally. I guess so. I guess if you want to be totally nuanced about it. I personally, I think we got the NASDAQ corrected more than 20%. I think the S&P at one point got close. And I'm not like, if it walks like a duck, if it quacks like a duck, you know what I mean? So if we're off 10%, I call it a correction. If we're off 20%, I call it a bear market. And I don't think too much about the nuance of those words. To me, I'm just talking, it's just the percentages, right? So at one point, the Russell was down 21%. The NASDAQ was down 19%. The S&P, I think, at peak was down 16%. So, yeah, I mean, we were somewhere between correction and bear market, technical correction and bear market territory. And I don't even think those numbers are just pulled out of the air, too. You know, what makes it a correction at 10 and a bear market at 20? I don't really think about the nuance of those words. I just, when it's close to 20%, I call it a bear market. That's all. Tiago says, Vic, I told you in the middle of the crisis in April, calling it a crisis, in the crisis in April that my portfolio was highly hedged in Fartcoin. Today, I'm flying high. Congratulations to you, my friend. Yeah. Yeah, so I think, I don't know. I don't really know how I feel about these trade deals. You know, this is all just, it's just openings for a lot of these these entrenched monopolies or oligopolies to impose their will on other countries. And, to me, it feels like the inverse of Biden's subsidies, which was preferential treatment to monopolies and oligopolies just through different methods. They gave money directly to corporations. In this case, we're giving market access directly to corporations. And I don't understand why we can't, why we shouldn't be just opening up opportunity just more broadly and allowing markets or people to compete for those opportunities. It doesn't really seem like that's happening. But I don't know, maybe I'm just too much of me is too idealistic, need to be more pragmatic. Let's talk about the VIX and the volatility structure. So VIX, I don't know, can I say it got crushed? Quietly crushed over the last 3 weeks. Back to 22. If I could say that's one saving grace, that while the narrative seems to be a bit still negative or not super positive, I would say one saving grace is that vol continues to work its way down. I would love to see vol at like 18 right now. I feel much more comfortable betting against the market direction right now if vol was back to 18. And so I think we still got to get there. VIX term structure, interestingly enough, it's looking a lot better. It's looking way healthier today than it has in the past. I mean, we've been looking at this in straight backwardation for a very long time. This thing's flirting like it wants to go flat. Flat is not great, right? That's not contango, but which is its normal structure, but it's looking a lot healthier than it has in the past. Another, I think, good, helpful signal, I think, for the position of betting against this thing, meaning betting against the market, betting to the downside, is that you don't have as much hedge, as much fear in the market. Now, the bad thing is it's flat, but it's flat at 22, 23. So it's not flat at like 18, it's flat at 22, meaning there's decent demand for protection in the market still. And you're still paying a decent price for hedging activity. Like I said before, I'd love to see this back at 18. I'd love to see this normalized into contango as a sign that true complacency was in the market. But we're not there. We're not there yet. This is from SLG. I own a small ranch of about 600 acres with about 150 head of grass-fed beef. It's amazing how hard it is to sell. Everyone wants to eat healthy, but not take time to search. Yeah, SLG. I agree. Jay says Amish in my area have that market cornered. I have grain acres I rent out. Their presence put a floor on prices for a lot of things. Interesting. Let's keep cruising here. I talked about this earlier for just a minute. I want to go back to it. The cuts starting in July now, and we've only got 3 priced for the year. So we had the over-under discussion a couple of weeks ago, maybe it was last week, when we were priced at 4 cuts for the year, 4 and a possible even. Would you take the over, the under? And I think some people wanted to take the over. I wanted to take the under. I took the under, and that means I sold short-term instruments. My preferred was the 2s. I sold the 2s, and those have risen I know this is so I sold the 2s. Those have dropped in price. The ZT futures have dropped in price, which means their yield has risen. So far that was a decent bet, and I'm going to hold it. I think they end at 2. I think if they can get away with it, they cut. It's somewhere between 0 and 2. But I do not think inflation. I don't think inflation is a problem right now. In the data, I think it's a problem in real life. I don't think it's going to be a problem in the data for the back half of this year. I think that's a made-up story. Completely made up. This is the one I was telling you about earlier. It's called Emergent Biosolutions, I believe. We traded this one. Traded this one a few months back, and I still own it. Actually, some of it. It's vaccines and antibody therapeutics for infectious diseases and opioid overdoses. It provides medical devices for biodefense purposes. Oh, God. This is an emotional hedge, man. You know, sometimes you buy these things and you want to lose money in them because you don't want the future where these things make money. These kind of look a little bit sick. Some of these miners look a little sick. I'm thinking it's probably time to hedge these things. Put on a collar. I'm long equity, particularly in Newmont mining. And I kind of think it's time to put in a collar on some of these stocks. They've done really well. We've made some decent amount of money in this. These things have come from like 40 when I first started talking about it up to 57 at peak. I think it's probably time to sell some upside calls and use that money to pay for downside protection and lock in some of these profits. On Newmont especially. This thing has been a big ripper this year. It's probably time to collar this bad boy, or just to sell it out outright. But I don't. This would, for me, was a longer term position on a relative basis. I still think they're cheap and they're under owned. But I do think it's possible, given everything I said about gold and the gold silver ratio, I think it's possible we see a little weak pocket here in gold. And these miners, the chart looks a little sick. Earnings May. They're going to have blowout earnings. You could sell the 55s, pay for the 50s, and just keep on basically $2.50 of risk on Newmont. But you lose any upside above 55 in the short term unless you choose to roll. I think that's what I'm going to do. Anyone buy the dip? Oh, the other thing I didn't get to talk about yesterday was Google. Anyone get the opportunity? I say the opportunity. Anyone buy the dip in Google yesterday? Any of you degenerates? I did. I think I got 151.60 or something like that. I put whatever price I got on Twitter somewhere. But I bought it $151.60. I got a decent price actually. Night Move says upside target for me and Newmont Mining is 70. I think it could get there. Yeah, yesterday I bought a little bit of Google, and I haven't been really establishing new positions here. But I really liked that setup. Apple adding AI to search, potentially threatening, what's that, the 20 billion or something like that Google pays Apple. I liked it. I think those types of things, in my personal opinion, are going to force Google to actually try to make money again, to do something interesting or innovative. They've just been sitting on the stuff that they own. They haven't been doing anything interesting at all. I was just going to get there. Mark says I bought the Palantir dip. Yeah, up 8% today. That's insane, man. This one, none of the old school defense companies are rallying. I don't get that. Raytheon a little bit. I don't get that, you know? It's like old school war is out of style. It's all drones and AI. What do we need warplanes for? What do we need ships for? I can't pull the trigger on Palantir. With a new stock position here. Which sucks, man. It sucks, but I gotta stay patient. You know what's funny? I'm gonna end up buying it. I'm gonna end up buying it at 100 and thinking it's cheap. This thing's gonna go to 150, crack down to 100, and I'm gonna buy it. And I could have just bought it in this congestion area. But I just think it's expensive right now. But it's so clearly like the next, I don't say clearly, it's so clearly the next thing. It's so clear we're headed to that world that I was like so fearful of, sitting in my home office in 2021, 2022, thinking about stuff, taking things to the far end of the distribution curve and going, over here I'm in a bread line. And over here, I'm getting CBDC credits. There's 150 vaccines on the schedule, on the CDC's vaccine schedule, and I need permission to leave my house. I have limited carbon credits that I don't use, that we sell off for additional CBDC credits. That's where I got when I took myself to each end of those distribution curves. So then I said, okay, well, what works in both? So I was like, all right, well, prisons work in both of those environments. Probably healthcare, certain elements of healthcare work in both of those environments. And on this side, it's way more about biotech. And so that's when I started messing around. That's why I wanted to accumulate mRNA, though I think they might have done a lot of brand damage. They might only be good for parts at this point, but mRNA, Pfizer, EBS, and then I started thinking about drones. So who's got decent drone technology that's directly investable? EVOTLs. It's basically like flying cars, flying vehicles, flying drones. Yeah, and then I thought about the right tail of the distribution, because you can't just always live in the left tail. No matter when you get left tail risk, you get a response that catalyzes you to the right tail. So if you're right about the right tail, you just might be early. So then I just thought, well, I'm going to buy all this stuff. I'm going to buy the drone technology and the biotechs and the automation. I couldn't get to the AI because it was too expensive. I'm going to buy the nuclear energy. I'm going to buy utilities. I'm going to buy water as a service, or water treatment. And sort of that's how I saw the world. And I go, I'm just going to buy the stuff that creates the parts that create that world, and just sit on it. And then, the other part was like the materials. I'm like, the critical materials, they take on a whole new meaning in that world. Rare earths, all these critical materials have a new heightened importance. So that's how I thought through those things. And that's the stuff I mainly hold. And I didn't want to buy NVIDIA and Microsoft necessarily, because I was kind of late. I felt the prices, they were already pricing that part of it. So let me go buy the second and third orders. That's kind of the way I thought through what I was buying. And Palantir at the time was like $18, something like that. It was maybe low double digits. And I was like, well, this is that world. If that world is coming, like, this is the perfect representation of the type of automated, authoritative control you would need in order to establish or maintain order in a world that nobody really wants. Nobody wants to live in that world. So how do you maintain order in that world? And it was a bit more academic than this. I'm just explaining like the sort of the core thought process behind it, you know. And then you go into the TAMs of each of these businesses, or the potential total addressable markets, what people are saying, and then what you believe to be true. Who are the market leaders? What do those companies actually look like? Are they real? That's kind of the hardest problem. It's like we live in a world with so much, so many fake companies, fake NGOs, fake initiatives, fake nonprofits. Figuring out if a company's real is actually pretty hard. All right, let's keep going. End of the week here. I'm telling you, data didn't look half bad this week, which I love. And we are now at the end of the first week in May. So this is 30 days past, quote unquote, Liberation Day. I was told, I don't want to be too cavalier. I don't want to be too cavalier about this too early, because I do think there is logistics and supply chain risk. But, people were effectively saying that the first week of May, by May 10th, your grocery stores were going to be empty. And I acknowledged the risk, acknowledged that there were concerns about this, but then also logically, we looked at durable goods. We looked at GDP. You look at retail sales, like all this stuff is getting pulled through to right now. So where do you think all this, if you can't say, you can't have two opinions. You can't have these two opinions that on one end, everyone's doing pull through purchasing because of tariffs and the uncertainty it's creating. You can't say that out of one side of your mouth. Then on the other side of your mouth, say, the stores are going to be empty. What do you think they're doing? Where do you think all that inventory is going? You think it's going to the consumer or the producer? And I think most consumers, the people in this world, they think that way. They think, oh, I better go buy some stuff to get in front of tariffs. That's not the average person on the street. They are not thinking, I got to go buy my new kitchen before tariffs hit. That's not how they think. So a lot of that buying was at the producer level. And so, yeah, like if this drags on with China for a long time, I think there might be less SKUs available and toys and stuff like this. And here's the other thing. Here's what is I think is a very high likelihood that as we get closer to the holidays, if a deal has not been struck, as we get closer to the holidays, you're going to see a five scale. Is that it? 5 alarm fire. 5 alarm. You're going to see a lot of alarm. The narrative that we're running out of stuff and that we don't have anything, it's going to be everywhere. It's going to be on TV and the 5 o'clock news. It's going to be in your news feeds. It's going to be on YouTube. It's going to be everywhere. And I would just implore people to think critically and logically when you start seeing that stuff. And judge things by your own personal experience in the real world. I think the biggest problem a lot of people have is they spend a ton of time online. And when you spend a ton of time online, you can there's a reality there that can get shaped for you. And then you forget that, oh no, when I went to the store, I got everything I need. I can get everything I need. If you personally are not impacted by this stuff, or you personally don't see it, you should take it with a grain of salt. That's all I'm saying. Because the longer this drags on, you're going to see it everywhere. And you got to ask yourself why. And then if you personally are seeing that same experience, well, then it's a different story. Then it corroborates. I don't think it's going to be in 4, 5, 6 weeks. I don't think it's going to be the issue that people thought it was. It's like, come on, man. You think our supply chain our supply chain is much more, I think, brittle than people would want to believe. But I think if you think we can't get cheap trinkets from other places for the holidays, think again. Things are getting shorter. This is Howie G says, things are getting shorter. In the last 5 days, Best Buy Dell 650 laptop is now $800. I don't know. Is that a lot or a little, Howie G? What's that relative to its normal price? Victor, what are you smoking? I need some. What do you mean? What do you mean? Howie G says, we will have shortages in the next 4 weeks. Yeah, but that's a moving goalpost. You're now at 8 weeks. 4 weeks from now would be 8 weeks from Liberation Day. And the people screaming about logistics the loudest said in 4 to 6 weeks, you're going to see empty grocery stores. And then the other thing, we will have shortages. Sure, but on what? On what? So if I go to the grocery store and I can get oranges and apples, and I can get, meat, like what exactly should I be freaked out about should I be freaked out that there are less, like less, what would be an example? Like less video games available at Best Buy? Should I freak out about that? I don't know that, like, I personally am not going to freak out that there's less video games available. I personally am not going to freak out if there are less, stuff with like cheaper circuitry, which is a lot of this stuff comes from. So like if there's less, what is that thing called? What's that thing called? The little cars that kids ride in, the electric little cars. I've been searching for that word for like the last 30 minutes. I can't think of the word.
Power wheels?
Thank you. Thank you. Jesus. Yes. Should I be freaked out if there's less Power Wheels at Target? No. If there's less action figures on the shelves? No. I'm not going to be freaked out. And not only that, if you're not careful, you being nervous about shortages is going to do the same thing they did post-COVID, where they convinced everybody about this revenge spending concept. And everyone's like, ooh, I'm glad I'm out of my house. Let me go spend all the money I just saved up. If you're not careful, they are going to trick you guys into spending all your damn money to get in front of shortages or being happy that you found something that was supposed to be in short supply. Captain Crunch Victor. I don't get it. You think I'm crazy? Is that what that means? Howie G says, no, you should not be freaked out. You are on the other side of the world. That's true. That is true. Laptops are commodities that run the world, including your YouTube show. Wrong. Most people watch this on their phone or their tablet. I hear what you're saying, Howie. If you believe that you're in 8 weeks, people aren't going to buy a laptop. By all means, in 8 weeks, let's have that. 4 more weeks, let's have that conversation. I am willing to bet you there are going to be shortages of certain SKUs, or low supply of certain SKUs, and I'm willing to bet you that the way the story is going to be told, it's going to feel like that's the biggest deal in the world. And all I'm saying is that it probably will be beneficial for people to take a step back and a breather from the way things are reported, and then and objectively ask yourself, was I ever planning to buy this thing or not? Did it personally impact me? And if the answer to that is no, then perhaps just frame it up differently for yourself. That's what I'm saying, Howie G. That's all I'm saying. And if in 4 weeks, my friend, I'm 100% wrong, grocery stores are empty, then I'll say this was a lot more impactful than I thought it was going to be on products that people care about and they need. But my mental model right now is one, there aren't going to be as many shortages as people think, and the shortages are going to be in items that are outside of people's critical consumption. But if I'm wrong, I'll say I'm wrong. Victor, damn, Vic didn't get his kiddos Power Wheels. He had one of those they had a motorcycle. I just couldn't think of the word, Victoria. New Kimberly Thomas. This is the most interesting thing that anyone said. Kimberly Thomas, new American-made products will fill the stores. I think they will, not inside of this time frame, not in 8 weeks. But I do think, look, if I was, there's a big part of me that is thinking, for a while the game was just buy high beta assets and the Fed's going to print you into wealth. Okay, then the game began. Just come up with some nonprofit organization that fixes some problem on certain aspects of our society that can never be fixed. Fix those things, and some government program will give you hundreds of millions of dollars, if not hundreds of thousands of dollars, and that's your golden goose, right? Now, to me, it seems like there's a big opportunity to make real business. You know what I mean? To create real economy business in the U.S. I think there's also a big opportunity just to own Bitcoin, I think, and not do anything really productive and then probably create wealth, if I'm right. But outside of that, there's an opportunity to create real business in the American economy right now. I do think that's true, Kimberly. All right, here's Soul Train says, Vic, honestly, can you admit if Big Lots, Party City, Kmart, and other consumer stores are closed, does that not equal empty shelves? If they had business, they would not have closed up. So correlation, not causation, right? All these, Kmart went out of business years ago. Party City went bankrupt after COVID. Big Lot, like these, just because these businesses just because these stores went out of business has nothing to do with what happened 30 days ago with these announcements. I hear what you're saying, but they're closing up for a whole different reason. And I would argue one of the reasons this place closed up. Let me not go down that path. Kimberly said the same thing. Where the heck is there a Kmart? I thought those places went out of business. Howie G says, I'm 76. You guys are not going to fill the gaps. You cannot even make it into work 5 days a week. Okay. Starting to help frame up your view of the world here. Okay. We can't make it into work 5 days a week. So let me hear. So what you're saying is, because your experience has been that, I don't know if that's a direct dig at me or if that's just if that's maybe a more broad dig at just the generation. So let me assume it's a generational thing. Because your experience has been higher levels of truancy with a newer generation, they are incapable of creating business. I don't think that's a good point at all. One, you don't show up to work 5 days a week to work for somebody else who tells you what to do. Ergo, if you owned your own business, which had your own unlimited upside potential, where you're motivated in a completely different way, you would not be successful. I think that's probably largely off. I get what you're saying. You're generally saying if you have a good work ethic habit, you apply it in all cases, and I would agree with that. But I also think like one person who doesn't show up at the job where you are at doesn't mean that all in our generation aren't capable of creating entrepreneurship opportunities for ourselves and for others. I just think it's a miss. I could make it into work 5 days a week, but instead I do it more like 6 days at random times for false emergencies by people with stupid priorities. That's really funny. All right. In closing, counselor, this is one of those times where I could be out on a ledge too early, and I will openly acknowledge that. I think there's one thing I want to do when I come here every day for 4 days a week. Zing. And that's I'm trying to make money. I'm not trying to be right or look good in front of an audience. I'm trading my real money, not a trade account that Tasty has given me. Like this, I'm trading my real money to try to make a better life for my family. So the decisions that I make in front of you on a daily basis, they impact the school, the money that's available for education and for my kids' legacy and after their kids' opportunities. And so I'm not trying to look good in front of you guys, honestly. And there's going to be some times when I make bad calls and it doesn't work. And I'm hoping that I can be intellectually honest with myself and have the integrity to come in front of you and say when I'm wrong. And I'm hoping that if I'm good enough, that I can make some money along the way. So this is one of those times when I'm hedged up a little bit. And this is one of those times where I feel like I need to be hedged, but I also think it's very possible that people start to settle into the risk in the market here. That we start to come off of a 22, 23 VIX regime into the 19 to 21, into the 17 to 19, and we get there slowly. We get there brick by brick. And that's very possible here. And if that happens, then I'm going to miss some upside between here and, 58 to 6,000. And so I'm just looking for other opportunities outside of that if I'm wrong. And the reason I think that big shining disclaimer is necessary is not because I think people are following me or following blindly, but it's just for perspective. Because I remember, there's some young people out there. I used to listen to these streams and I'd hear a couple ideas and I might take it as gospel and I'd run with it. Oh, he's long silver. I'm going to boom. I push the button. And I think the perspective is necessary because if I miss out on the silver trade, well, it actually just means that, at least in my mind, if correlations hold, it probably means that markets roll and that my hedge is working and that I'm maintaining my portfolio equity. I can pull my hedge and then give myself upside exposure at a more opportune point in the marketplace. That's how I trade, right or wrong. That's what I do. So that I think that perspective is necessary for anyone that's listening. Because if you just pick off one or two things and you don't understand how I'll mix them all together, I think, you could end up. I need some sleep. My articulation. That were supposed to be ingredients, not a whole meal, if you catch my drift. Anyways, so this is where I am. I'm leaning I'm leaning just slightly long in the portfolio. I'm long stocks, but I'm hedged with short futures to bring my delta down to close to neutral. It's leaning slightly long. I am short the twos still through ZT. I am long Bitcoin as a trading vehicle. I am long silver as a trading vehicle as well. And so that's my story. That's my positioning to close out the week. I'll reevaluate over the weekend, but that's where I'm at right now. It's been a fun week. My apologies for the absence, as I said, both on Hear Me Out and yesterday's stream, but couldn't do much about it. I will see you back here on Sunday for First Call, 5 o'clock or 4:55 Central Time. PM. We'll see you back here then. I'm going to go get some sleep. So maybe I'm not so marble mouthed by Sunday. We'll see you back here, folks. Peace.